sense for me, then that's what I want to do. And if I want to use loyalty points, etc., that's something that I as a customer want to do, and we're busy working on services like this as we speak. So the idea is really that, I think crypto is definitely going to make up a lot more of how we go on and transact, not just as customers on services like Zilch, which is something we're going to be talking about early next year and are already working on, but we also see this B2B naturally as well. So for instance, how are we clearing and settling retailers, and could we not rather be doing that either with blockchain or crypto than fiat? And that's certainly something we're all looking at.
Well, that's probably a great place to leave it at. Unfortunately, we're out of time. Philip, thank you so much for joining, and thank you everyone for listening. Again, this was Philip Bellamont, founder and CEO of Zilch.
We can all recognize potential, but to truly unleash its power, we need a tool that takes us beyond the surface, that opens up entirely new dimensions of possibility, allowing us to harness this power with the knowledge, security, and speed to put us ahead of the curve. Copper, the unfair advantage.
Hi, everyone. It's great to have Paul Murphy with us today to chat about the changing venture capital landscape in Europe. Paul Murphy is one of Lightspeed's newest partners. He joined just a couple months ago in their Europe office, and before that, he's been an investor at Northzone. He's invested in some of the top startups in Europe, like Tier, the scooter company, and Hopin, the virtual events platform. He's also been a founder as well, so it's great to have him. And I'm Ivan Levingston. I'm Bloomberg's Europe tech reporter. I cover VC and startups. So I think to get into it with Paul, I'd love to, hear about why Lightspeed is starting to build up its Europe operation and where you see the opportunity locally.
Yeah. Hey, Ivan. Hi, everyone. Thanks for having me here. I guess to start, Lightspeed, Lightspeed's a fund that's been around for a long time. It's kind of one of the few top global brands in venture capital. As such, it's been investing in Europe for quite a while now. We have about 20 companies already. So the focus, for us and for me is not so much about entering Europe. It's just about taking advantage of all the companies that we're seeing now. There's been an explosion in phenomenal companies, great talent coming, in some cases coming back from Silicon Valley to where they're from. At some point you have to sort of realize that doing it all from Silicon Valley is difficult. And so we felt like it was a good opportunity to kind of build a team here locally.
Yeah, that's a great point that I wanted to dig a little more into. I think there are certainly funds in the US that are investing in Europe from their San Francisco headquarters. So what are the advantages of having an office, and how do you navigate some of the cultural issues that can come up with having a separate team in Europe?
Yeah, so I think that, first thing is just to kind of give some context around scale. There's, in the US, if you look at just the companies that get seed funding, there's between, call it 4,000 to 5,000 startups that get seed funding every year. In Europe, we're almost half of that now. And that's, dramatic growth in the last few years. So I think you can, if you're very focused on certain sectors or themes, you can, obviously in today's world, you can invest from anywhere. I think that, for early stage investing to really be successful, it really comes down to knowing the founders and the teams that are working on new projects. So often that comes from before the company's even formed. You know who some of the key talent is at some of the best tech companies. You talk to them when they're thinking about leaving those companies. You maybe have the first or second conversation after they leave their company, and they're thinking about starting something new. And that's really, in an ideal world, that's where the relationship starts. Of course, you can do that from the other side of the world or on a different time zone. But when it comes to sort of networks and personal connections, usually it's easier to do that locally. So that's one of the reasons we decided to build a relatively small team of senior partners that could kind of expand the footprint for Lightspeed in Europe.
And And you've focused on earlier stage investments, and I think that's something we're seeing broadly as valuations heat up. Many investors are looking earlier to see if they can find more attractive deals. How is the competitive landscape changing? Do you find that you have to fight with other funds to get in, or just a rising tide lifts all boats scenario?
Well, the early stage funding is definitely growing. The competition is certainly there because there are more funds, but growth investing is also growing dramatically. It's tripled just in the past few months. So on a percentage basis. So there is a lot of capital coming in to startups in Europe at every stage. And that means there's competition, which I think generally is a good thing for founders. And I think it's generally also good for the ecosystem. I think one of the things that isn't often spoken about is, the role that your first kind of long-term institutional investor has to play in the company, on the board, as an advisor, and finding that fit. As someone, I used to be a founder. I've raised funding myself and sold companies. That fit with your first long-term investor is so crucial. So I think the fact that founders have more investors to choose from is a good thing. Obviously, for companies we really fall in love with, we want them to choose us. But usually that happens. It doesn't always happen, and that's okay. So I think we just sort of try to place our cards carefully. One of the things that the approaches that we've taken, which I think is slightly different from many of the other large global platforms, is we've decided that we're not going to try to see every company. We're not going to try to beat every fund in every deal. There's a set of themes, topics, kind of patterns that we're looking at, and we're saying, let's go find the best company that fits that theme globally. And if they happen to be in Europe, then we'll jump in and we'll get that company in Europe. And the beauty of our fund is we can, whether that's a seed investment or a growth investment, we have the kind of flexibility to compete at any stage.
And how do you think about geography in terms of an eventual IPO for your companies? I think it's been a big topic this year, the attractiveness or lack thereof in terms of European capital markets as a destination to start trading. Do you still see the U.S. as the primary venue? Or do you think eventually London will attract more?
I think it's evolving. I mean, it's definitely not an area that I would claim to be an expert on, but my limited experience seeing, a handful of companies in Europe go public, both here as well as in the US, is that, you typically want to sort of go public where either your market is, your customers are, so there's familiarity, or in some cases where it makes sense from an investor base. I think Europe will do well by becoming, and London in particular, by being a more attractive market for companies to go public on. And I think that will come with time. But, for us, the reality is we're a global fund. We want to make sure that companies go public in the place that is best for that business. And, oftentimes that's in the US, but I'm sure we'll see more in Europe over time.
I'd love to dig a little bit into some of the sector-specific opportunities you see. Where are you focused these days?
So I think we're a generalist fund. My background is I spent some time at Microsoft, so I know enterprise software. I also started and sold a game studio, so I know gaming, and a search engine as well, which we sold to Facebook. So for me personally, that's quite a few buckets that I tend to sort of get deals in and look at. And then, had some success investing in events, healthcare, other categories. I think as an early stage investor, what we tend to focus on really is around product and around the founders. And usually the common thread for our successful early stage investments is something that just seems exceptional on those two dimensions. As you get slightly later stage, you then need to become more, I would say, form more of an expert view on that sector. How does it go from $1 billion to 10 billion in value? So, for some of those later stage investments, the areas that I do tend to focus on are gaming, mobility, productivity software, which is, tends to sit at the intersection of kind of consumerized apps as well as B2B software. So, and then, yeah, we've, since I've joined, I've officially been at Lightspeed now for 2 months. In this market, it feels like 2 years. But, I've made a few investments. First one was a gaming platform. Second one was something that lives in the metaverse, which was before Facebook's announcement, and working on a few others that are sort of decentralized tech. So that, those aren't necessarily kind of Web3 or crypto investments, but they have that technology embedded in them.
Yeah, I'm glad you bring up the metaverse, because that's actually what I was going to ask. What kind of opportunities does that open up, both in terms of gaming or otherwise, and are you trying to take advantage of that push now, or is it still too early?
No, I think, when you distill it down, all sort of the metaverse really is, from our perspective, is doing more of the things that we have done kind of in person, physically, online. And so we've all been living to some extent in the metaverse during the pandemic, because everything's been digital. I think then the question is, are there ways to sort of personify us, whether it's in gaming or other forms of entertainment, or potentially even in some work scenarios, digitally, in a kind of another place. So that's the kind of thing that we're starting to see, and gaming, I would say, is the kind of the first, most logical application of that. We've invested about $300 million in a number of game studios and crypto companies, most recently Faraway Games, which is using Solana. It's enabling these kind of highly social gaming experiences, all kind of quote unquote in a different world.
Do you think that the metaverse will be this broader place that we all live, like the vision that Mark Zuckerberg was sketching out, or do you think the opportunities for investors, at least, are drilling in on areas like gaming that have already shown they can get a lot of traction there?
So gaming is interesting. Gaming tends to sort of be one of the leaders and pioneers in new technologies and platforms. So if you think about the first wave of kind of companies that monetize successfully on the social web, they were gaming. If you think about the first wave of companies that monetized on mobile, they were gaming. So you had Zynga, kind of the first social wave, and then you had Supercell and King on mobile. So to me, it should be no surprise that gaming will be the first to kind of fully take advantage of everything that Web3 and the metaverse offers. But just like we've seen on social and on mobile, that's just the starting point. So one of the investments that we haven't announced yet that we're making is something that is much more in the enterprise software world. But it marries that with the metaverse, and we think that is increasingly going to be something that very professional, kind of established businesses want to think about as they kind of contemplate how to motivate their teams and connect with people when they're not all in the same location physically.
I think another trend that's dominated over the last year and a half has just been how the pandemic has changed all of our behavior, both moving online and in terms of investment in high tech, and you've seen valuations surge. Are there, I guess, any new opportunities you're seeing as we leave lockdowns? And also, how do you think valuations will change? Will we continue to see this acceleration, or will that start to fade a little bit? Things slow down.
So my view on this is actually, I think, a bit different than most. I think the increase in valuations are totally logical. They've grown dramatically in a short period of time, but if you think about the TAM, the markets that we're going after, they've exploded in the last 2 years. So you have a decade of progress moving to digital happening in the space of months or years. So the fact that tech, which is the primary beneficiary of that transformation, is going to see companies become more valuable more quickly isn't really a surprise to me. And I think what you're finding, to me, perhaps most surprising, is not the valuations are going up, but that you're building phenomenal companies in a period of 1 to 2 years. One of my investments, Hopin, in my last firm, their valuation skyrocketed in less than a year, but they've built an incredibly robust business in that time as well, with real revenue going after real customers.
In terms of the speed going forward, central banks are now starting to think about raising interest rates. So will that eventually cool things?
I think that probably will. I'm also probably not the best person to give a really sort of thoughtful opinion on that. What I will say is that there is a substantial amount of capital out there right now chasing some really big opportunities. I think if you just step back for a second, tech initially was going after your business, like media, right? So that a $2 trillion kind of business. It's now food tech, $4 trillion. You've got construction tech, $10 trillion. You've got fintech. Who knows how big that is. And so, tech is really infiltrating every aspect of society on both consumer and business side. So I am sure that economic policy will have some impact, but I think that's probably going to be overridden by the huge opportunities that tech is going after. And how we're actually changing how people work and live, mostly for the better.
Nice. And one area I did want to make sure we get to as well is mobility, just because you've invested in Tier, and that's an area I think where Europe has emerged as somewhat of a leader. Urban mobility. How do you see the scooter wars continuing to play out, I guess, and do you agree that's an area where Europe has a leadership position?
Yeah, I think it's a great example. The micromobility overall, I think, is a fascinating category, and I do think Europe is the best market globally for micromobility. And scooters are kind of the first incarnation of that, but then you've got sort of Vespa style mobility. You've got electric bikes. I'm sure there will be new hardware innovation as well. I think the reasons that Europe is the best in the world is it's got the best bike lane infrastructure. You have some of the most dense cities in the world, which is always good, when you're thinking about supplying a city with a set number of vehicles. You also have, I think, a real desire on the behalf of cities, governments, to move away from primarily diesel cars, which are literally killing people on the streets, to things that are, much safer and much healthier for everyone, not just the person kind of driving the vehicle. And we've seen that play out. I mean, I think if you look at I obviously have firsthand knowledge having invested in Tier, but the unit economics are unmatched of the European players versus those outside of Europe. So I think we will see the global leader emerge from Europe. Obviously, I think that will be Tier, but we'll see.
And another area that's getting a lot of attention. I'm in Lisbon. If you can't see, I'm right next to the water, and I'm here for Web Summit. It was a big conference of investors and startups, and crypto really dominated conversation over the last week. You've invested in crypto gaming startup Clang. How are you assessing that market?
Yeah, I think what we're seeing right now is a shift from crypto as a category to invest in to crypto, blockchain, Web3 as sort of more fundamental building blocks of companies, modern companies in tech today. And so it's, of course, I think most companies don't have necessarily a story around crypto or blockchain, but many do. And we don't think of them as kind of crypto companies. And that will probably just continue to evolve in the same way that, 5-10 years ago, every company had a mobile strategy. And 10 years before that, every company had a web strategy. So I think there's going to be an enabling force that crypto provides. Initially, it'll be around monetization, but I think long term, it's, there's some really interesting tech, which is going to help kind of with every facet of building a company.
Nice. And as our time runs down, I do want to make sure we have the chance to take any questions from the audience. So please feel free to submit some. And as we wait, I can ask, what's your outlook for the end of the year? Do you think we're going to see some last big deals before the holidays?
Yes, and I think there used to be these sort of quiet periods in venture capital during the summer months, over the holidays, and that seems to have gone away. So I think that we'll see deals continue to happen almost kind of irrespective of the time of year. Now, the seasonality in venture capital, I think, is a thing of the past.
And what about that fast timeline? Is that speeding up as well? Do you feel like you're in a rush to do your diligence? So it's something that we thought a lot about. And my personal view is, sometimes you have a company that approaches you and says, "Hey, we've got 2 term sheets. Do you want to talk?" And if we know them, we'll talk to them. But that's not really, I think, a recipe for success for either the founder or us as a fund. I really believe, as someone that I've raised plenty of capital from different funds, like, you really want to get that match right between the fund and the partner and then the startup. So I would say what used to be 2 months is now 2 weeks, and that's a totally acceptable timeline. But 2 days is a bit tough. So those are the ones that for me, I just shy away from. Very nice. I think I've hit the timer, and maybe people are a little tired from the end of the week, so didn't see any questions. But thank you very much, Paul, and thanks everyone for joining today.
Thanks, Ivan.
Welcome, everyone. My name is Anna Paglia, and I'm the Global Head of Invesco's ETFs and Index Strategies business. And with me today is Ryan McCormack, Factor and Core Equity Strategist at Invesco. We are thrilled to continue our fantastic partnership with Bloomberg for Bloomberg Financial Innovation Summit. Many of you know Invesco as one of the world's largest asset managers and one of its most innovative financial companies. For instance, take Invesco QQQ. It's one of the largest ETFs in the world and has enjoyed over 22 years of live track record. The fund is legally old enough to enjoy a cocktail. In those 22 years, we have seen quite a bit of change. The parabolic acceleration of the digital age, 5 different US presidents, 3 recessions, 1 pandemic, yet all the while, Invesco, QQQ, and the companies within the fund continue to innovate through it all. We have strengthened our already deep relationship with NASDAQ, as Invesco is the only domestic asset manager with funds that directly track the NASDAQ 100 index. And we have expanded into new and exciting relationships like the Digital Asset Council of Financial Professionals, and perhaps most notably with Invesco being the official asset manager of the NCAA and QQQ being the official ETF of the NCAA.
Now, many of you may know that QQQ tracks the NASDAQ 100 index, the preeminent large cap growth index in the US. It's comprised of the 100 largest companies listed on the NASDAQ exchange, ex-financials, which may beg the question, why are we discussing financial innovation? Well, we believe that the lines between traditional finance companies and technologically oriented companies are being blurred. We believe that QQQ's company's intersection with digital or crypto assets is a reflection of the forward-looking nature of these companies. Their consistent spend on research and development seems to enable them to stay ahead of the curve on a number of transformative themes, including digital assets.
That's right, Ryan. We try to quantify innovation from QQQ companies by looking at research and development spend along with patent filings. Specifically, we work with our partners to analyze patent filings of QQQ companies across more than 30 different disruptive technologies. Some of these disruptive technologies and teams like cloud computing are very well established. Others are still very much in their infancy. Think, for example, human augmentation. And others are somewhere in the middle, like patents that deal with digital assets and the technological infrastructure that supports these assets.
And to quantify that, in a one-year observation period from May 31st, 2020 through May 31st, 2021, we found that QQQ companies exhibited significant patent activity across digital assets and some of those related themes. For instance, 10 QQQ companies filed at least one patent relating to digital currency, which collectively made up 19% of the patents filed related to digital currency. 19 QQQ companies filed at least one patent relating to blockchain, collectively representing 13% of the patents filed for that theme. And 24 QQQ companies filed at least one patent related to mobile payments, representing roughly 18% of all patents for that theme.
QQQ companies are at the forefront of the global digital transformation in finance and many other areas of the market. The landscape of digital assets and digital transformation is ever changing, and the rate of change has been swift. Consider how recently and quickly cryptocurrencies moved from cyber invention to relative legitimacy. But QQQ companies have been there to foster this change.
And whether it's digital asset miners becoming increasingly more reliant on NVIDIA's graphic processing chips, the continued advancement of blockchain technology and its applications from companies like Alphabet and Microsoft, or Amazon Web Services supporting broad segments of the cryptocurrency universe, these companies are creating value for partners and customers alike.
These QQQ companies count themselves as some of the most innovative companies in the world. Companies that have shown a commitment to staying ahead of the curve while exploring new and exciting trends and building products and services around them. Invesco QQQ creates an opportunity for every investor to become an agent of innovation.
Hi, everyone. I'm Carol Masser again from Bloomberg Business Week on Bloomberg Radio and Bloomberg TV. Delighted to have with us Jeff Jones. He's the president and CEO of H&R Block. Jeff, it is so good to have you here when we're talking about everything that's going on in the financial sector, especially when it comes to innovation, disruption. And so many of the conversations are dealing with things like crypto, blockchain, stablecoins, decentralized finance, DeFi, robo-advisors. All of this we know is important, but in many ways, financial innovation can be so much about financial inclusion. And I saw a Fed report that was out over the summer. It mentioned 18% of the U.S. population are unbanked or underbanked. We have to think of innovation as inclusion. You agree with that?
Oh, I completely agree with that. And thank you for having me. I think you just hit the highlights of all of the hot innovation. But just to set the context a little bit, because I'm guessing a lot of people don't even know this, but H&R Block was a federally chartered bank for about a decade. And even after we divested in 2015, we've continued to offer a lot of financial products to our clients. And then I think when you put the tax event on top of that, we literally have millions of hours of conversations every single year with our clients. We serve Main Street America. And for them, they're on average, they're getting a $3,000 refund. But getting that right, given the stakes are so high, that money's already spent for them. They're 53% of them plan to spend it on bills and to pay down debt. So there is a lot going on in the market for sure. But when I think about what's really happening on Main Street, the needs are still quite basic.
Well, and this is and something that resonated with me when we had our conversation last week in planning for this, is that you say normal for so many of the people who use the H&R Block platform, normal is being cash strapped. That's just the way of life. And I think, we have so many conversations about, individual balance sheets are so strong right now. There's been all of the benefits from the government because of the pandemic. But yet, for so many Americans, normal is just a rough way of life when it comes to their financial well-being or lack thereof.
Well, there's no question. And we did see a spike during the pandemic, the famous stat about the number of Americans that can't handle a $400 surprise. We've seen, daily balances in savings accounts grow. But the Fed just in the last couple of weeks have also said that's trending down again. And so we did see consumers get flush with cash, by their definition. But I think we're on a way to return back to normal. And that normal is trying to figure out every single day how to build just simple financial healthy habits to get by. And, I said to you, they don't view themselves as in trouble. They just view this as a normal way of life, looking to get by and looking for any tool or tip to help them maximize, their cash flow and what they're trying to do every day.
What's great about your platform, Jeff, is that you do tap into a segment of Americans. And I think it's safe to say middle income, maybe lower income, but it's millions of Americans, right? Safe to say. Right. What do they tell you that they really need in terms of financial products, or what innovation would really help them in their situation? Because you guys are really tapping into it in the services that you're continuing to roll out.
Well, that's exactly right. And if you think about the tax refund, again, about $3,000 on average, we try to help them think about that as a jump start for the new year, as opposed to, ending the prior year. And what they tell us they need are just simple, practical tools to help them get started. That could be rounding up, saving a little bit more, working with partners to help that refund dollar go further. So there are a number of little things, and, they're not asking us for big innovation and breakthroughs. They're asking us to help them every single day take a step forward.
So, as you said, a tax refund can be a jumpstart for Americans. So talk to us about, how you think about the company. You guys recently laid out Block Horizons 2025. So you are doing some long-term planning when it comes to small business, when it comes to financial product innovation, and to the experience on your platform. Talk to me a little bit about that and how you think about what your community needs, what they're telling you need, and the vision you've set out for the company.
Yeah, absolutely. So last December, we announced what we call Block Horizons. And this was really about the next phase of our transformation. We're just coming off the best year in over a decade for the company and really building momentum in terms of how we innovate and expand and diversify our offerings. Today, we serve about 2 million small business owners already, tax, bookkeeping, and payroll. In financial products, as I mentioned, today we're offering short-term loans, refund advance, the Emerald card is a reloadable debit product. And after the first of the year, we'll be launching what we call today Block Money, which is really a big move for the company into the fintech space and offering this very tangible product to help build these healthy habits for our clients. We're digitizing the whole business. Obviously, that makes sense. And that's really the theme of what Block Horizons is all about. But we're gaining great momentum in the business and serving more clients in more ways.
Tell us a bit more about Block Money and how it works.
So Block Money is really building on the success of our Emerald card franchise, which today is the third largest reloadable debit product in America. We have millions of clients loading billions of dollars onto that product. But we've always positioned Emerald Card as all about the tax event, literally a mechanism to load your refund. And then we haven't done much more than that. And Block Money is really built to solve some of the most important needs we hear in the market. Things like saving a little bit more, making your dollar go further, starting to work on credit building. And if you just take a big step back, there are about 35 million underbanked customers in America, and about 8 million of them are at H&R Block. And so you really think about 35 million in America, 8 million at Block, they're already coming to us at least once a year, revealing their most intimate financial situation in their tax return. So they look to Block to help them, and we can't wait to launch Block Money again just after the first of the year.
Jeff, a big part of what you guys are doing too is you're thinking about this customer, and so much of what plagues them and makes it difficult for them to kind of get out of the hole, if you will, often is the high fees that they pay, whether it's overdrafts or whether it's when they do get credit, the rates are just off the charts. So it's very difficult for them to get ahead. You guys consciously think about this. I mean, it sounds so simple when we're talking about stablecoin and crypto and all these high-tech things, but just something as simple as that would be incredible innovation for a huge swath of Americans.
Well, it really is. And, when I look at the companies I study today, there is so much innovation happening in this space, yet there still tend to be a lot of hidden fees and high interest rates. Even today at Block, with our Emerald Advance product, which is a short-term loan generally around the holiday seasons, that has a 36% APR, which is supported by the CFPB because of the low rate. Our Refund Advance product, which is literally an advance on somebody's refund, has no fees and no interest. And we're able to do that because our core business and tax preparation has a lot of built-in fixed cost, and we can leverage those costs in a wider portfolio of products to deliver value for the customer and to also continue to grow our top line and earnings as well.
What's the repayment or fault rate on something like that? What's the insight you can tell us about that?
Yeah, it's a real key with our banking partner at Meta and the underwriting we do. We feel very good about what our loss rates are on both products. And with Refund Advance in particular, we're lending to people who are clients. And so we know from history what their refund is likely to be. And so for them to get that advance cash really helps them at a time of year when cash matters most.
Right, and the refund's going to come in. So in terms of a default, right, exactly. It really doesn't exist.
Correct.
It's interesting. Well, talk to me a little bit about small business. You mentioned 2 million small business customers. I mean, we can't say it enough about how important small business is. I think there's nearly 47% of our private workforce is small business. There's more than 32.5 small businesses across the United States. It's so important to our economy. It's an important part of your business sector, and you guys definitely are big on that. Gig economy, too, has got to be things that show up on your platform. Let me first ask you, how does it feel like the small business industry? Does it feel like it's come back? It is coming back after the pandemic. Is it healthy? Is it still struggling? What are you seeing on that front?
Well, absolutely. And it's so funny if you think about it this way, but, job quits are almost at an all-time high. And new business starts are also, trending at record highs. So I don't know if it's a one-to-one correlation of people quitting and starting businesses all the time, but we're definitely seeing a recovery. That said, as we see every single day in the world, labor market is putting a lot of pressure on small businesses. Access to capital is still very hard for many. We see that uniquely among Black-owned businesses. We have a program that's a great example of when our purpose and our products come together. We set a goal for ourselves to impact positively 500,000 small business owners over the next several years and really help them with financial acumen. We have a program right now with the Urban League in Kansas City where we're helping Black-owned businesses by providing free financial coaching and bookkeeping and tax preparation, and even starting to award micro grants of $5,000 to $8,000 to help them in a short-term way. So small business is the backbone of our economy, and we absolutely see recovery happening.
Well, and Wave Financial, right? This was a big part of your thinking and strategy of how you build out small business for you guys over at H&R Block. What was it about Waves? And it's interesting, and I did a little bit of reading about it. I mean, they're disrupting that small business market, and they were really offering, free accounting, like really doing it in a different way. What was it about, Wave specifically that you knew this fit in with the strategy of the build out of what you guys wanted to do at Block?
Well, when we took a step back and thought about our small business strategy overall, in a lot of ways, it was like consumer tax. There are people who are doing this work themselves, bookkeeping, payroll, et cetera. And then there are people that want to turn it over to an expert. So our strategy has Block Advisors, which is our business for those that want someone to do all the work for them. And Wave Financial, based in Toronto, is really the DIY product. And you're absolutely right. If you think about all the small businesses today, none of them got in business to, do accounting and taxes, right? But the tax man does cometh. And so they have to be ready for that event, whether they like it or not. We see that most small business owners, they wear a lot of hats. They want to maintain control. And as a result, every dollar matters, especially when they're getting started. So most of them are doing bookkeeping, with a shoebox and Excel spreadsheet. And Wave is a great value for them because it gives them 100% free accounting. And then now with Wave Money, a 100% free business banking account. So think about every charge made on that business account automatically reconciling and categorizing in Wave accounting. And then with the push of a button, exporting a year's worth of records to Block for tax. So that's an incredible value. We make money in the invoicing and payroll businesses and on interchange, but that core platform is 100% free to small business owners.
What's the activity that you've seen on that platform in terms of growth? It's pretty significant.
It's very significant. And I think, Wave's growing 30+% a quarter. And I think a big part of that is
that top line? Is that top line?
Top line. Yeah, top line growth. And, they were growing fast before the pandemic. When the pandemic hit, they really slowed down. And this is great evidence of the recovery because we see their business recovering back to pre-pandemic levels, really on the strength of that value proposition when every dollar matters.
Jeff, one thing I wanted to ask you, you were briefly president of ride sharing over at Uber, and I'm just curious, you've been in kind of more traditional industries, but certainly Uber, we talk about the Uberization of the world. Nobody can doubt, whether you like them or not, the impact that they have had on our world. How did it shape how you kind of think about what needs to be on your radar? And especially as you think about H&R Block, it's about tax, right? We have to pay for it. It's a little boring, forgive me. But nonetheless, you are thinking about, but it's a necessary part of our world and you're building it out. So how does maybe your experience at Uber kind of add to what you're doing or how you are thinking about where this company needs to be 50 years from now?
Yeah, I really appreciate that question because I was only there 7 months, but there is no question that that company helps see possibility in transportation worldwide like no other. And I think that relentless focus on the customer, the power of data, constantly thinking about what's possible is really all the spirit of what we're up to at Block in our own transformation. Tax isn't something that most people look forward to. We do, obviously, but the average customer doesn't. And so the other thing that I think Uber did that we're absolutely doing is, Uber talked about democratizing transportation and making it available to people that otherwise didn't have the means. And when we think about serving Main Street America, whether it's consumer tax or small business owners or the financial products, that expertise, that combination of digital tools and capabilities, those are all things that I think I were inspired by at Uber and at Target and, other great places in my background.
So financial innovation, how do you think about something like crypto or blockchain or kind of how the world is changing? How do you think about it? What are the discussions you guys have at Block about it and how it might eventually impact the platform?
Yeah. I think innovation for customers happens on different horizons, no surprise. And I think the near-term horizons for us and our customers, crypto certainly plays a part in terms of how we help people with their tax planning based on transactions, the rise of retail investors in general, obviously, we think about from a tax perspective. But then in terms of our platform, we're looking at so many things right now from, what's happening to build credit with debit products, what's happening with buy now, pay later, what's happening with instant payouts and payroll. All those are trends in addition to blockchain and crypto and others. But I'll still come back to, at the end of the day, our customers want us to help them maximize their value because the stakes are very high. And they might be interested in all of these innovations, but if we don't deliver value for them, really nothing else matters. So we have to pay attention to this ecosystem, short-term and long-term, and make sure that that customer is getting value from H&R Block.
No, it's a really good thought. And I do also think about, you speak about paying attention. Who do you pay attention to? Is it certain companies? You mentioned the buy now, pay later, which all of a sudden you think about, it's not a new concept, but it's back in a big way. What are the either companies or trends that you really focus on right now?
Yeah, well, those are definitely a few of the trends. I'd probably add to that contactless payment. I think about my own behavior during the pandemic and how quickly I started going to apps that had Apple Pay built in and how fast you're able to get your meal and transact. I think that's obviously an incredible advancement. And there's so many companies doing amazing work today. And I think being externally focused and paying attention, it just matters to innovation. I love what I see happening at Shopify, the fintech part of their business, but also the SaaS part of their business. A company called Dosh, helping consumers get more value for their dollar by having this ecosystem of rewards and loyalty, I think is incredible. Maybe a couple companies I love right now that aren't pure fintech companies, but I look in the restaurant industry at what Toast is doing and building this just incredible platform for small business owners and restaurateurs. Look at Chipotle. I think their app is incredible, that combines payment and rounding up and loyalty and all in one place. So I just think it's an incredibly exciting time to be in this industry. And I think those are just a few examples.
Well, and just to wrap up here, because I think about where we started, and we're talking about just so many of things that are going on right now when it comes certainly to the financial industry and fintech. What is it that you think for those entrepreneurs and innovators who are out there coming up with new ideas and figuring out different ways to do it? What do they need to keep in mind, especially when I think about where you and I started, that innovation, yes, but innovation can be something as simple but so significant as inclusion?
I'm afraid it's trite to even say it, but obviously remaining just incredibly customer focused. There's so much happening in the world. It's easy to be distracted by what other companies are doing or what competitors are doing, but staying focused on the competition, obviously learning from experimentation, but something we talk a lot about at Block is having urgency and patience. We have to be urgent. Sorry, I was just going to add, we have to be urgent in understanding and solving problems, but we also have to be patient to iterate and learn and let things play out over time. And so getting that balance right can be hard, but it's very much a part of the culture at H&R Block.
Well, and it's interesting, too, reading so much about the culture and some of your releases that you guys also remind us that, especially since we're so technology focused right now, that you need human expertise combined with technology to really create those really significant solutions. Jeff Jones, thank you so much. Learned a lot.
Thanks,
I really appreciate it.
Me.
And taxes are not that boring.
We love taxes.
We love taxes. All right, be well. Jeff Jones, CEO of H&R Block.
Hi, everyone. Thanks so much for joining us and being with us as we continue these conversations that we've been having throughout the Financial Innovation Summit. I'm really glad to be joined by one of two men who are going to be talking with me for the next few minutes behind Chia, which touts itself as a more sustainable, faster, and secure blockchain platform. Right now with me is David Frazee. He is a managing partner of Richmond Global Ventures, and he is also a board member of Chia Networks. David, thank you so much for being here.
It's my pleasure. Thank you for having me.
So, David, let's just start here. For people who may not know, what exactly is Chia and how does it differentiate itself from other blockchain platforms?
Sure. Well, it may help to step back and ask the bigger question about what does blockchain need to look like in order to power large sections of the economy in 20 years? Because that is definitely where we're going. And a lot of the current blockchains have certain deficiencies that make it hard for national governments, for multinational institutions, central bankers, corporations, and others to adopt it. So Chia was essentially designed asking the question, what would Bitcoin look like if we could redesign it today? And what will be necessary to power trillions of dollars of the world economy in the financial services sector, asset sector, and adjacents? So Chia has focused first upon sustainability. So Chia uses, depending upon how you measure, 1/300th to 1/10,000th of the energy of, say, Bitcoin, which is important for the long-term sustainability of a blockchain. It fixes a number of the security flaws and security issues with other blockchains, and it's built by the world's, I think, best distributed network architect, Bram Cohen, who built BitTorrent. It has compliance built into it, both in the sense it has never itself been an illegal securities offering, like a number of tokens and coins out there, and enables compliance, which is important for larger institutions. Peer-to-peer transfer, maybe that isn't so important, but the ability, if you're the CFO of a Fortune 20 company, to have auditable, traceable transactions that are compliant with Sarbanes-Oxley and the highest accounting standards. And similarly, if you're a national government, to have auditable, traceable transactions is absolutely crucial. It's programmable, meaning that it has all of the capacity to build applications and services, because you have to understand, when we think of blockchain, people think of cryptocurrencies and, get rich quick 20-year-olds out trading and talking about, different coins, but it's really the rails of the new economy. It's the underlying infrastructure that permit the exchange of money, goods, assets, and their adjacents, which ultimately become the internet of markets across all markets. So it has to have programmability and the capacity to create different applications on it. And finally, it's public and it's equitable. It's an open source project. Anyone can create a node and be a farmer. So it's inclusive in that sense. It doesn't require hundreds of thousands of dollars of specialized computer equipment that you have to have for other cryptocurrencies and other blockchains. And the applications that will ultimately be built on these rails, I believe, will have an important effect on the middle and working class of the world in enabling their access equitably to financial services and products that are not foreclosed to them today, but are prohibitively expensive or slow or have intermediaries that add a lot of friction to the process.
And I'd love to bring in, we saw Gene Hoffman pop into here. He is the second person joining us. Gene is President and Chief Operating Officer of Chia Networks. Gene, can you just build on what David just said? I mean, how were you actually able to do that? Did you ask yourself, if you could rebuild Bitcoin, what would you do? What went into sort of Chia?
Yeah, it was very much looking at the state of the art 11 years after Bitcoin. And we started about 4 years ago. This was not a short project in that sense. And it was taking a disciplined approach. One of the things we didn't do is do an ICO in 2017. Bram certainly could have, being one of the most famous protocol engineers out there. Instead, it was, okay, what is the state of the art? What are the real problems? And in fact, Bram invented new math in 3 different places on our product roadmap to really be able to deliver the technology that's necessary to answer some of these hard problems. In 2009, Bitcoin kind of didn't have a sense of what would the application layer look like. And no one really had a sense about how you might go to market and fund development. One of the things to me that's been sad about the Bitcoin development story is it's been begware to some extent. It's developers out there saying, hey, the new guys, you should donate to them. And it's, a kind of troubling situation where people are making millions of dollars while the actual developers there were not getting paid. And so backing up to your point, we really looked at the 3 major flaws. We looked at sustainability because, if Bram and I were able to deploy internet money and the rails for financial infrastructure globally, that is the promise, you end up using something like 20% of the world's baseband power. And that's exactly the long legacy, right? We also think that blockchain should have gotten product market fit in 2017, but we think that the early adopters took a look at the offerings at a time that was really Ethereum and its Solidity programming environment and said, we can't have the risks that we see out of the DeFi infrastructure on Ethereum. $113 million last week was lost. This week, I think it was $20 million. This was not something that the CIO of a major bank, the head of information tech at NGO or multilateral could accept.
Well, so how, though, do you actually measure those green components that you were talking about, being sustainable and being equitable? Because, of course, that is something that we're talking about, especially during COP, but how is it that you're actually measuring that and ensuring that you are providing an opportunity that other platforms are not? Gene?
Well, I will say there's no such thing as a free lunch. So there is some energy use to be able to get the security that Bitcoin also has, right? But I like using Hoover dams. It takes 28 Hoover dams to run Bitcoin annually, okay? And, if you think about Hoover Dam, that's a large amount of power. Right now, to run the Chia network, it takes 6% of a Hoover Dam. So if we had 15 times the size of our already 40 exabyte network, it would be 1 Hoover Dam's worth of annual power consumption. And, it compares well to the banking infrastructure, to the New York Stock Exchange, to Visa and MasterCard. When you add those things together, and those are the things that fundamentally are going to ride on the rails of a, enterprise class blockchain, it's actually as well or better, but it's much more secure. And that goes to your second part of your question. Bitcoin at its peak had 210,000 full nodes. It is now around 65,000 full nodes on a kind of day-to-day basis. At our peak earlier this year, we hit around 750,000 full nodes and currently have between 300,000 and 400,000 full nodes. Really important for 2 reasons. I mean, first of all, to be clear, we are now the largest public blockchain ever. It goes to the point that we are massively globally distributed. I mean, if you want to know where our nodes are, you kind of compare GDP and internet access globally. And, that's really why we can sort of firmly say that you've got that more security. You've got to go convince 200,000 node runners that they should change the rules of the road. And that's what's really led to, the news we're talking about today.
Yeah, and I want to talk to you both about some of that news. You have just announced, you're announcing today about the World Bank partnership, which sort of goes in line with what Chia is touting. Talk about that and sort of how that is going to have an effect on, lowering emissions, which we're all trying to strive for.
Yeah, this is a really interesting program by the World Bank. We're really excited to be a technology partner to them with, the entire world, frankly. It's creating a public good, which is the climate warehouse. And the idea behind the climate warehouse is to create a, and I love blockchain this way, decentralized, centralized database. So the idea is that every nation's carbon registry, every existing carbon registry can come together in a single place, be able to report the kind of history of carbon credits, and then be able to track and audit them as they're retired over time to really address the double spend issues. Has this carbon credit been retired twice? Can we make these markets now cross-nation and cross-border? And we will be continuing to work on that with some additional announcements we'll be making over the next month or two. But the whole hope here is all of the great things about a blockchain. I mean, it's permissionless. So, individual nations, individual carbon registries kind of have equal footing inside that. It's using a new piece of technology we call data layer, which allows you to have kind of a set of federated databases where, say, one country owns one table in that database. And so that's where they're going to update and change their carbon credit counts. But everyone else can see when they update and cryptographically prove that they're downloading the right update from each of the databases, and all stay in sync. What's on chain is just the audit material. So the chain publicly, continues to be able to be easy to be synced to 400,000 people. But then in the background, they're going to create websites and other things where you can really programmatically guarantee that, yes, this is country X's entire carbon registry. These are the changes over time.
Yeah, and it's important.
David, I'd love for you to jump in. And I was just going to say, there's been some criticism, though, about carbon credits specifically. So where does blockchain sort of fit in here as to sort of pushing us closer to becoming greener?
Well, one thing I was going to say.
Yeah, go ahead, David. Go ahead.
Yeah.
I was going to say, this is actually important.
David, we could start with you.
We have latency, so that's for those watching. I was going to say, this is actually a very important story because this is the largest asset-based application of blockchain so far in history, and there are a number of announcements coming up that will actually supersede this, but this is an important basis for a number of applications and services that can be built. Gene can speak more eloquently here, but among the issues with carbon credit specifically, as Gene alluded to, is some of the double spend, the trust among nations with each other. Having a distributed database, which ultimately is what blockchain is, that is verifiable, auditable, traceable, reliable, is an important first step to ensure that everyone can have Paris compliance in a way that is trustworthy, and it eliminates, frankly, a lot of the charlatans and a lot of the fraud that happens in these markets. Gene, I'd like to turn it back to you.
Yeah, the whole point here is to build reputation and then to enable kind of cross-border trade. Today, a California carbon credit is really kind of only valid in like California and Quebec. And that's, in fact, kind of sad, because it turns out that California carbon credits aren't the types of ones that are, susceptible to the frauds. So the whole idea here is that you have a public database, a public record, where the individual nations and registries are peers in that data set, and they're sharing that data publicly so everyone can validate it, audit it, go dig down into the shapefile, the pictures of the trees, and see that, no, this isn't being greenwashed. This really is someone who went out and planted another 100 acres of actual carbon sequestration trees.
And is that a little bit how you see this functioning once it's up and running and operational? And how far out are we from actually seeing that?
So it is right now still a second prototyping stage. So they've run previous kind of simulations, but this one expects to be a bit larger. The difference is we hope together with them that this may be the kind of final solution to this problem, and maybe a few additional options to make identity management and some of the ways that you'll kind of handle the data set itself simpler. But this is very much a near-term opportunity. The World Bank said that this was originally a 6-year program that they're 3 years into, and they feel like the Chia blockchain can take 3 years out of that project.
And I'd love to talk to both of you. I mean, we were speaking the other day, and you said that blockchain is going to be the biggest financial story in 20 years, right? But who is going to end up being successful? I mean, what is it going to take? Because there's a number of platforms out there. What do you think are the keys to making this work and having it stick and making it be equitable, as both of you have sort of alluded to? David, maybe we start with you.
Yeah, I mean, and let me just give my perspective. So I'm not here to say Chia is going to be the winner, but I do think that what Chia has built is now the new table stakes. Everyone has to do at least this in order to move forward. And it goes back to what I first said. We have been looking, I mean, as investors at blockchain for over a decade. And our thesis has always been blockchain's absolutely going to win. Bitcoin won't be the winner, and a lot of the current entrants won't be the winner, because they don't check the boxes of, again, what the real customers who power the economy need, the multinationals, financial institutions, governments. And peer-to-peer transfer matters, but you have to build something that can have wide-scale adoption. And if you're a national government or you're a CFO of a Fortune 10 company, you can't use a blockchain that's done illegal securities offerings, because among other things, they may be shut down, and you just can't risk reputation. You have to have auditable, compliant transactions. You have to do something sustainable. And there's a point that we didn't get to earlier, which is one of the inadvertent side effects of the design of, say, Bitcoin is it not only rewards you for having very expensive, highly customized equipment, but it rewards you for having access to cheap power. So we see a situation where a lot of the nodes are located in authoritarian countries next to, say, cheap power plants, which not only hurts the environment, but it concentrates the nodes in places that are not good for trust. As a national security matter, if our financial system is based upon blockchain in 20 years, we need nodes distributed in Western democracies, emerging and transitional companies, not just concentrated in authoritarian places where power is cheaply available. And that's not only for the environment a good thing, it's good for national security, and it's good for the trust of the system. So all of the predicates that Chia has are now the new minimum necessary requirements. And the way innovation works is there will be other blockchains. I mean, no one ever wins everything. But this was built to raise the stakes. And 20 years ago, a lot of the financial media wrote about the .com era as, oh, look at pets.com and how silly it is. But if you look at the GDP of countries, and if you look at the market caps of the top companies, a lot of this economy was built in that period. The same thing is happening today. I want us to move from covering Elon Musk tweeting about some scam coin and talk about what do we need as an infrastructure society to move forward in order to have this promise that we're talking about.
And I want to follow up that, the interesting thing here too is we once heard about a tech starter entity. They were doing kind of fantasy football for developers internally in Nigeria. And they decided to use Chia as the bidding currency. And people asked them why. And the answer was, well, our power is expensive. We can't afford to buy an Antminer 19, which starts for about $5,000 and ships in 6 months. But we have old hard drives around. And we were able to go actually farm some Chia, and now we're actual real participants in this network. And so it's that ability to create a global, trusted, untrusted trust. It's a really strange kind of concept, but what you're saying is that, you could trade a carbon credit with someone you've never met, and neither of you can, do the deal badly. In the past, when you went to Craigslist, and you went to buy a Beanie Baby at McDonald's parking lot, this was a scary transaction, right? Were you going to be robbed? Was the guy, going to actually show up with a Beanie Baby? You're now talking about, for example, trading stocks and trading bonds with someone you've never met in a way that no one can actually, screw the other person. That's a real change in what we can do. And by building an enterprise class blockchain infrastructure that can build the Internet of Markets. So, the whole point here with a client warehouse, for example, is to start building the foundation of a global cross-border, cross-market carbon credit market. And it's permissionless. It's one of the other things that's really important about a good blockchain. If you're a carbon credit market in Europe and you decide, hey, wait, this is becoming the de facto settlement stage, you can just integrate to this blockchain without asking anybody, much less us. And that's an important point. So, where we're headed is a world that instead of, it's kind of silly that stocks only trade from 9 a.m. to 4 p.m. Eastern. We're going to go to a world where everything trades 24/7, 365 with global liquidity. It's a very different kind of situation. And to date, we've kind of been hung up on just the money use case. And I will say blockchains aren't going to cure cancer. I hear too many people trying to claim that kind of thing. But blockchains are going to radically reshape how carbon credit markets, equities markets, debt markets, anything that can be tokenized and traded will be.
And you both believe that anyone, anywhere, you mentioned Nigeria, can really have access to this and really benefit as well?
So the one application people have missed is that if you're in a non-OECD country, cross-border remittances are already heavily done in Bitcoin. Something like 1 in 3 Nigerians have Bitcoin. It's because of this. When your brother in Brooklyn wants to send you money, the quickest and easiest way right now is to actually grab Bitcoin. We love that. We think that needs to be taken to the next level. It needs to make even easier, even more global, even more liquid. And I liken it a little bit to like the way that Africa skipped the wireline telephone, went straight to wireless. Here in the OECD countries, we have a Chicago Mercantile Exchange. So, if you're an American farmer, you can absolutely hedge your crop risk. But, a lot of African nations that don't have that, and having a global, crop futures market that's available from their Android phone, that's a real game changer. And that's the things that blockchains are going to make available finally.
One of the great things about transformative platforms, which is what we talk about the Internet of Markets, is the applications and services are limited only by the ingenuity, creativity, and actual real-world problems that everyone faces. So I couldn't even begin to dream to tell you all the applications people will build over the next 10 years, but we need a platform for that to happen.
All right, we have to leave it there, unfortunately, with both of you. Quick discussion, but I'll definitely have to have you both back. David Frazee, thank you so much for your time. And also Gene Hoffman, thank you both for joining me today.
Thank you.
Good morning, everyone, and thank you so much for joining us. My name is Tim Stenevec. I'm an anchor at Bloomberg Quick Take, also Bloomberg Business Week Radio. Very pleased right now to be joined by Zach Prince. He's the founder and CEO of BlockFi. Zach, how you doing this morning?
Doing great. Happy to be here. Thanks for having me.
Yeah, well, thanks so much for joining us. Look, I want to talk about the BlockFi Rewards credit card that offers Bitcoin as a reward in just a second. But first, not everyone who's tuning in right now might be familiar with what BlockFi does. So just take us back about 5 years ago, before you started BlockFi with your co-founder. And give us an idea of what the genesis was. What made you start it?
Yeah, sure. So Flory and I worked together in the online lending sector, and I started personally investing in cryptocurrency back in 2015. And in early 2017, it became clear that this asset class had legs. It was going to become mainstream. And just like other asset classes, there was going to be a need for financial services, debt and credit products. And that's where BlockFi really started and cut our teeth. We were the first company to make it possible for folks to borrow dollars with their Bitcoin or other cryptocurrencies as collateral. First company to get licensed for that in the US, to raise institutional capital for those making those types of loans. And from that starting point, we've rapidly expanded our product suite for both retail investors and institutional market participants. And today, on the retail side of our platform, we offer that loan product. We offer an interest account where folks can earn a yield on their cryptocurrency or stablecoin holdings. We have trading where you can buy and sell assets. And then the newest and most exciting product from my point of view, which I'm a massive fan of, is our Bitcoin rewards credit card, where instead of earning airline miles or cash back, the rewards currency is Bitcoin. So you're getting Bitcoin back on every transaction.
Okay, more on that in just a second, but to contextualize the size of how much you've grown, just from a couple employees a few years ago, you now have 850 employees. Revenue last year, about 65 million. What's it looking like for this year?
Yeah, so we're on track for around 475 million in gross revenue this year. The company has grown from 4 years ago, nothing, but today we service over 500,000 retail accounts, 200 institutional clients. We have over $15 billion in client assets on our platform, and things aren't slowing down.
Profitability yet?
Not profitable yet. We're still focused on growth and reinvesting in building new products and giving our clients as many rewards and kind of wealth generating incentives as we possibly can. So we could be profitable as early as next year, but we're still primarily focused on growth.
And right now, valuation, according to your last raise, between 4 and 5 billion, right?
Yeah, that's right. In our last round of funding, we were valued at about 4.5 billion.
Okay, so let's talk about one of those consumer products that you offer, the one you're really excited about, the Bitcoin Rewards credit card. It's been about a year since you announced that, about 4 months since you started offering it. Most recently, at the end of October, you said more than 60,000 total card holders. You've paid out over 124 Bitcoin, which is more than $7 million at today's levels. What do you know about the people who are using the card right now?
Sure. So the people that are using the card are a mix of cryptocurrency enthusiasts who are always looking for more ways to earn Bitcoin and keep growing their stack of cryptocurrencies. But we've also seen a really interesting cohort of folks that we refer to internally as crypto curious people. These tend for us to be high earners working in the financial or technology industry. They're kind of in a U-shape geographically in the US and in major cities on the coasts of California or the East Coast or Texas or Florida. They skew younger and they spend a lot on credit cards. So the average spend that we're seeing on BlockFi cards right now is around $5,000 a month. Compare that to Amex or Visa premium cards that are more in the $2,000 to $2,500 range per month. So we've got a young, smart, wealthy, really excited consumer base. And one of the things we're going to be rolling out next year that I'm really excited about is merchant offers, where retailers and other types of firms that want to advertise and promote their products to this incredibly high value segment of customers that use the BlockFi card. They'll be able to do that through offering incentives where, right now the base rate is 1.5% Bitcoin back on every transaction. In your first 90 days, you earn 3.5%. But we'll have some really exciting stuff coming out early next year where at select merchants or for select products, you'll get even higher rates than that.
Here's the thing, though. You live in New York. I live in New York. We can't actually get this card right now. It's not available in New York.
Yeah, so the credit card is available in 49 out of the 50 states in the U.S. New York is the only one where it's not currently available.
What are the conversations you're having with regulators to make it available to New Yorkers? I imagine that's an audience, that's a customer base you want to have.
Yeah, absolutely. I can't comment too much on the ongoing dialogue that we're having at BlockFi with a number of regulators, in New York, included in that. But I think we're optimistic that the card and other products on our platform will be available in New York sometime next year.
Okay, so first half, second half, what do you think?
50-50. 50-50 chance.
Okay,
Could be either one. Neither would surprise me. Neither would surprise me.
I'm really interested in what you said about the crypto curious who come to BlockFi through the rewards credit card. Are you seeing the credit card as kind of like a, for lack of a better term, a gateway drug to get people into the BlockFi platform and get people into cryptocurrency who aren't familiar with it or don't use other platforms?
Yeah, absolutely. I mean, we think of our kind of position in the market when compared to most of the other large cryptocurrency companies, which are exchanges. We think of ourselves as a bit more of a wealth management type of platform where we want to be offering a suite of products to folks that are easy to use, that are really valuable for them to use. And each product can be the hook and the first kind of acquisition of a customer in and of itself. The credit card is just the newest iteration of that. But yes, absolutely. The behavior that we typically see is someone will start with the credit card or start with our interest account product, and then over time they'll also be trading or potentially taking out a loan. And we really want to build that high level of engagement with our clients, and we hope that they'll see a lot of value out of multiple products that we already have and products that we're launching in the future.
In conversations that I had with you and your team ahead of this conversation today, I learned that about 5% of your revenue comes from the credit card right now. How do you want that to grow?
I think payments as a category. So the credit card is our first product in the payments category. We expect that to be 10 to 15% of revenue by the end of next year, and close to 30% of our overall revenue by the end of next year. By the end of next year, we'll likely also have a debit card available and more payment options, especially outside the U.S. Today for our U.S. clients, they can send money to and from their bank account and their BlockFi account. But for our clients outside the U.S., which is about 30% of our client base, they're still reliant on cryptocurrency payment rails only. So they can send us Bitcoin, Ethereum, stable coins, but they can't send us money from their traditional bank account yet. And so payments is a big growth area for us, both in terms of products and features.
What about specifically when it comes to the pipeline around the credit card? How do you see that product evolving? Do you see yourself offering a credit card with a different type of cryptocurrency reward?
Yeah, so before the end of this year, we'll give folks the option to flex their credit card rewards. We currently have that available in our interest account where you can deposit Bitcoin and flex your interest that you're earning into stable coins or vice versa. And we'll be launching that same type of feature for the credit card before the end of this year. So you'll be able to earn the rewards in Ethereum or Uniswap or any of the other cryptocurrencies that are supported on our platform. And then we have a lot of other really exciting things in terms of enhancements to the credit card product that we're expecting to roll out. So we'll be launching a roundup feature where folks can round up all their transactions each month to the nearest dollar and then have that incremental amount also be converted into Bitcoin. We'll be enabling folks to pay off their credit card bill with their stablecoin balance on BlockFi. And then the thing I touched on earlier, card-linked offers where you'll earn a higher rewards rate at select premium merchants.
Are people running a balance on these cards, or are they paying them off each month?
Paying them off each month. This is a premium card. We see very, very low rates of folks carrying a balance. Folks are setting up auto pay. They're not getting charged any interest. They pay their bill on time. And so there's not a lot of balances being carried month to month whatsoever.
Okay, so it's clear the demographic of the cardholders here. What are you thinking about when it comes to offering a credit card that isn't at such a premium level? Is that something you're thinking about right now?
Yeah, so I think not over the next 6 months, but certainly over the next couple of years, we'll start to create credit card segments. You see this with airline cards, for example, where you have the elite super premium card. Maybe there's a platinum card, a gold card, and a silver card. We'll start to do that on the credit side, but we'll also launch a debit card product that will be available, regardless of folks' credit scores, and we'll also earn cryptocurrency rewards based on how much you spend on it.
How do you do that? Because typically you don't have rewards associated with debit cards to the same extent that you do with credit cards.
Yeah, you've seen this a little bit, from folks like Coinbase and Crypto.com with their debit card offerings. There was a legislation passed that enabled smaller banks to charge high interchange rates even on debit cards, and a lot of fintech companies and cryptocurrency companies have partnered with those types of banks to issue debit cards that do earn rewards. But I agree with you, it's not the norm across the entire debit card landscape.
Hey, let's talk about the BlockFi interest account, because I know there's a lot of interest around there, no pun intended. A handful of states, though, New Jersey, Texas, Alabama, Vermont, Kentucky, they're essentially saying that this product that you offer to consumers is illegal, saying you're offering unregistered securities. You got a cease and desist from New Jersey and Kentucky. Give us an update on what's happening there.
Yeah, so we're continuing to have very productive conversations with regulators. A lot of this is a matter of education, and there's not necessarily precedent for financial services products on cryptocurrencies, and so there's a lot of back and forth. From the beginning of creating BlockFi, we've strived to be compliant with all U.S. regulations. We've been a leader in terms of getting certain licenses for certain activities. We've been doing KYC and AML on every customer on our platform from day one, and we're going to continue to have that as our focus. There were some orders this summer, which were originally set to be effective this summer, and what they contemplated was BlockFi stopping to sign up new clients into our interest account product. New Jersey being kind of the most notable C&D, and the other states being requests for hearings or requests for information type of notices. As of now, the New Jersey C&D has the effective date has been delayed to December 1st. So, our clients have not experienced any change in the availability of our current products or their ability to sign up for those. But it is an ongoing conversation, and we'll hope to, as soon as we can, share information publicly about what exactly we're talking about, what changes may happen in terms of the regulatory status of certain products or their availability.
What would happen if federal regulators or state regulators essentially said that you were offering securities? Would you have to change your business model?
It depends on the details. It depends on the details of what that means. There's precedent in the cryptocurrency industry for things to have been a security at one point and then not be a security at a later point. There's precedent for companies that issued tokens via an ICO to go through enforcement actions, but still have and reach a settlement, but still have those tokens be available and the blockchain be operational in the marketplace. So I think there's a wide spectrum. I think we're feeling optimistic that we'll be able to keep adding the value and offering the products for our clients that they know and love and really enjoy and have been very financially beneficial to them. But it's an ongoing conversation, and I don't want to pontificate too much on where we're going to land before we're in a place we're able to share.
Well, on a big picture level, how are you thinking about conversations with state regulators versus conversations with the SEC on the federal level? Like, how would you characterize the different discussions that you're having?
Yeah, on a big picture level, if you zoom out, I think that it's a real opportunity for the industry that these conversations are starting to happen. And ultimately, it's an indication of the fact that this industry has grown enough in terms of size that these conversations have to happen. So it's kind of a marker of success in some ways. And I think it really is a big education battle. There's a very diverse spectrum of knowledge around how cryptocurrencies work, what cryptocurrency companies are doing across the political landscape. I think that there's a diversity of opinions at the state level, and anytime you have a diversity of opinions at the state level, it's helpful to have clarity at the federal level. And I think that the current administration, through various branches of government, is starting to work towards that right now. And ultimately, regardless of what that clarity ends up being, when we look back a few years down the road from now, when we look back at this point in time, I think we'll say it was very valuable for the industry that clarity was achieved. And that clarity enabled further growth across a lot of different product and service categories, including ones that BlockFi operates in.
Hey, you and I were talking off camera a little bit about how much you love New York and you love being here. I'm wondering, though, if we see any sort of regulatory action in states or on the federal level, if it would cause you to think about leaving the United States and setting up shop in another country.
Look, I think you see American companies for a variety of reasons, both inside and outside of financial services, have subsidiaries or separate branches outside the U.S., whether that's for tax purposes or for distribution purposes, or simply because they're targeting international markets for their products and services. And we already have entities outside the U.S. At BlockFi in a couple of jurisdictions. I expect that our regulatory footprint is only going to continue to grow, but I don't anticipate at this time that there's going to be some hard switch for us or for others that already are headquartered, domiciled in the U.S., leaving completely the U.S. market. I think that cryptocurrency companies, regulators, and American citizens are all, in theory, aligned around the fact that just like the internet, we want the big companies in this innovative technology sector to be based here. It's great for our economy. It's great for our national security. It's great for our soft power around the world. And so while there are outstanding questions around the implementation of specific regulations and how they apply to this sector, I think we'll move towards an outcome similar to that of the internet, where we want the biggest companies to be in the U.S. And we want to facilitate that.
Zach, if you go to BlockFi.com right now, there's a yellow banner at the top that provides customers with an update about regulatory actions that are happening in states or ongoing in states. Is there anything, though, on the regulatory level happening at the federal level? Any investigations coming from the federal level that we should know about?
Nothing that I can comment on at this time.
Okay. Hey, I want to talk about Neuberger Berman and this partnership that's happening. You announced it last month. It's a joint venture that you're going to, quote, develop and distribute a series of crypto asset management products and strategies. What does that mean?
Yeah, so we're really excited about the partnership with Neuberger Berman. The impetus, or one of the initial things that was exciting about the partnership, was distribution for a product of ours that already exists. It's the BlockFi Bitcoin Trust. It'll start publicly trading probably sometime in the first half of next year. It has 100 million in AUM today. So that product has gone into this JV with Neuberger Berman. But what we're most excited about is the pipeline of products that we intend to launch together through the partnership, which will include publicly traded kind of beta exposure type products, whether that's a futures ETF or spot ETFs, when those are available to be traded and get approved from the SEC, or whether it's privately traded thematic exposure types of products. So think about a DeFi fund, for example, that's rebalanced regularly and gives institutions exposure to not just Bitcoin, which obviously we've made a ton of progress on and is, in my opinion, kind of a no-brainer at this point to have an allocation to, but also stuff that's more on the cutting edge. We'll be making announcements really regularly over the next 12 months around what that product pipeline looks like and when certain things will be live.
So why a joint venture rather than just adding it as your own product? Why did you need Neuberger Berman?
Yeah, so Neuberger Berman is a very large, 420 plus billion in AUM asset management firm. They have a global sales team of over 1,000 investment professionals and phenomenal relationships with LPs and distribution sources for a variety of products. And they're a trusted brand with a great history of delivering value for their clients. And we felt that combining that with BlockFi's expertise in cryptocurrency markets and BlockFi's operational and technical capabilities to facilitate investments or to facilitate investment strategies in this market would make both of us stronger and position these products for scale and success.
Zach, I want to end with just helping us think about where you think we are when it comes to cryptocurrency and financial innovation. So if we think about equities and fixed income and where we are with those asset classes in terms of fully developed, where are we in the life cycle of cryptocurrency right now?
We're still in the early days. We're still in the very early days in terms of, the not the earliest adopter, but kind of like the early majority part of the the S curve of adoption. So I think we're still in the early majority phase. We're not fully mainstream yet. There are still really exciting things happening for the distribution of Bitcoin and the productization of Bitcoin and connection of Bitcoin into the traditional financial markets. With things like Ethereum and Solana and other smart contract based blockchain platforms, we're still in the early days of seeing applications be built on top of those and generate adoption. And we're still in the early days of seeing traditional assets be tokenized and moving around on blockchain rails. And the biggest thing that's happened there to date has been stablecoins. And I expect a lot of growth there, but we'll see that with other assets too. So the dollar is just the first thing that's achieved a lot of success and adoption being tokenized, but I think that will happen with other assets as well.
Zach Prince, founder and CEO of BlockFi. Zach, a great conversation. Thank you so much for joining us. Really appreciate it.
Centuries, money has taken many shapes and forms. Seashells, salt, and tobacco, before paper bills were invented. But could the 21st century be the end of money as we know it? Cash is scarce these days. Most transactions happen with a tap on the phone. The invention of blockchain, internet payments, cryptocurrency are all disrupting traditional banking. El Salvador is the first country in the world to adopt Bitcoin as the official currency. Developing nations with poor access to global financial markets consider the revolution an equalizer, but advanced economies are sounding the alarm. They say crypto is too volatile to be trusted.
Cryptos are not currencies. Full stop.
Retail trading is easy now, but also risky. Against this backdrop, how can investors navigate risks? Where do the opportunities lie? We convene the biggest innovators catalyzing change in the global financial market. This is the Bloomberg Financial Innovation Summit.
Hi, I'm Joe Weisenthal, and I am here with Sam Bankman-Fried. He is the CEO and founder of the crypto exchange FTX, but he's really got his hands in sort of numerous things, having had an incredible few years in many aspects of the crypto world. So it's a thrill to have him here and get his perspective. Sam, thank you so much for joining us.
Yeah, thanks for having me as always.
There's obviously so much to talk about, but, one of the things that I've been thinking about lately is crypto regulation is always one of these things. People in Washington, they talk about it, and it really feels like it's coming to the front burner, and particularly stablecoin. So there are many aspects of crypto regulation that could theoretically touch, or regulation that could theoretically touch crypto, but stablecoins feels like a very front of mind topic right now. Yeah. You're a user of stable coins, your exchanges trade stable coins. What are you looking for in terms of like a regulatory regime that makes sense for stablecoins?
Totally, and this is absolutely front of mind. The presidential working group recently released a memo on it. We've seen, lawmakers, regulators comment on it. We've gotten questions from regulators around the world on it. And, the way I see it, there's sort of one sort of like biggest piece of stablecoin regulation, which is missing today, and I think it is going to become really important, which is basically ensuring that it's backed the way that it says it is. And, I think you could design a sort of registration and transparency-based regime where, basically stablecoin issuers have to give daily attestations to exactly what is backing their stablecoin. There have to be, audits every 6 months or whatever, to confirm that it is in fact what they say it is, and, some guidelines around what those things can be. And I don't know exactly where you draw the line from like dollars in U.S. bank account to treasuries to like grade A plus U.S. corporate paper. Like there's a spectrum here. I think it's almost less important exactly where you draw the line than like drawing it somewhere, being explicit about that, to make sure it doesn't slide too far down into the really risky category. Maybe you have haircutting on, grade A plus corporate paper, 10% haircut or whatever. So you need to be over collateralized there. And
so I may have frozen there. Maybe you could hear me. So your sense right now is that this clarity is lacking in terms of what's needed.
Yeah. I think that's right.
Yeah.
Yeah.
Let's pivot a little bit on another stablecoins related question.
Yeah.
What about just the ability to track how they're used? And of course, this has been from crypto from day one. This has been a source of anxiety. And of course, even before stablecoins, there was something called the Liberty Reserve, and this idea that like, well, you can't just like hold $1 in a bank and then give someone a token representing it and then let them do whatever they want, because the government sort of likes to know that people aren't engaging in international drug dealing or terrorist finance or things like that. These have been sources of anxiety for crypto probably since like crypto was invented. Does there need to be anything further done on the stable coins from that perspective?
So I think that there could be sort of at least a codification of, what we're seeing right now. But I do think that, frankly, there's already a lot being done on that front. On the money transmitting front, that's sort of been the case where it's been, if anything, clearest how global regulations apply to the cryptocurrency industry. What we have to say, first of all, you need to be, fully KYC'd in order to create or redeem a stablecoin. And so the ultimate, issuance and redemption of these are. And then the issuers generally have the ability to blacklist addresses on the blockchain that are known to be associated with financial crime. And this has happened from time to time. And that is sort of the core of the approach that's going on today, combined with if you're using a stablecoin on a centralized platform on, FTX or any other centralized exchange, right? You're going to need to go through that exchange's KYC process as well. And so that sort of is the core of what's being done. But obviously on top of that, whenever you have a public ledger, which you have with all major blockchains, it actually provides a pretty powerful tool for tracking and combating financial crimes, because when you know where someone started with some pool of assets, you can trace through exactly how those flow through the whole crypto and economic system by looking at address to address where the coins move, and contacting any centralized sort of organizations in that. So patching those together, there's already a pretty decent network of anti-money laundering type of controls.
I want to ask one more stablecoins question. I mean, obviously, as you mentioned, front of mind here, there was just a federal government paper that was released on stablecoin regulation. But FTX operates all over the world, including in many emerging markets. And historically, a lot of emerging markets, particularly not fully open ones, have attempted to limit the ability of people to get dollar-denominated assets. And people might want dollarized assets, and yet that might be something that is limited, or banks only allow so much. Could stablecoins, the fact that I could send you a stablecoin just from my phone to your phone anywhere in the world, regardless, are some of the other markets that you operate in, is that a source of anxiety for them?
It absolutely is. And I think there's sort of a few ways to look at this. One, from sort of a U.S. strategic point of view, thinking about what is the reserve currency of the crypto economy going to be.
Yeah.
And right now, it's unambiguously the U.S. dollar. And interestingly, it's the U.S. dollar whether or not you're looking at American crypto economy. If you look at European crypto transactions, Asian crypto transactions, Latin American, African, no matter where you look, there's the local on-ramps where people figure out how to get from their local currency into crypto. But once they're in crypto, they're going back and forth between Bitcoin and US dollar stable coins. So right now, 95% of transactions are happening against, a US dollar or US dollar pegged asset. And I think that that's probably good for the US strategically. And, I think there's a serious risk if regulations on stablecoin become unworkable in the future, that while everyone is pretty happy right now with that, that could change to a different currency. Maybe it changes to euro or yen, or maybe it changes to RMB. So that's sort of one side. When you look at it from the local government's perspective, what we found is what they care about the most is the step where the user goes from their local currency to something that isn't their local currency. And so when a user is going back and forth between Bitcoin and USDC or Bitcoin and Tether, the local governments don't tend to care very much because it's already not in their local currency. Like, to the extent that there is something they're trying to combat, that already happened. And frankly, when someone's going between US dollars and USD stablecoin, they don't care that much because, again, that's already happened. But the case where you often do see a lot of regulation is around going from local currency to non-local currency. Each country handles that differently, but in China, we've seen a lot of crackdowns on the RMB-based crypto markets. In Korea, basically only Koreans can access the KRW2 cryptocurrency markets. And you see patterns like that in a lot of different countries where there clearly is some concern from them about this being used as a vehicle to move money out of their economic control.
Let's pivot to some of the market developments that we're seeing in crypto. You are, I think, as of announced this morning, backing a new fund for Web 3.0 gaming. And this is a hot area. And the idea that, with crypto blockchain platforms, there could be done more than just trading and speculation. And we've seen that take off in a fairly big way over the last, 6 months, maybe. There's a game called Axie that's really popular. It's still not clear to me with some of these games whether they're fun to play or whether people just play them because they can click their mouse and a few keys and over time make money. Right now, what do you see as the state of crypto gaming, and what do you see as the potential for why it could be an improvement on sort of like mainstream games that exist on a corporate server?
Totally. And the first thing I say is I think you're going to see a really big difference between crypto companies trying to make a game and gaming companies trying to introduce crypto. I think that, frankly, it's really hard to make a really engaging video game. I don't think I could do it, right? I mean, it would take a long time to build up that expertise. And so when you hear about, a top-tier gaming publisher looking to introduce crypto into their system, I'm pretty bullish on that. When you look at the opposite direction, I think my reaction is well, why do we think this team that's sort of like a crypto team is going to be able to build a great video game?
Interesting.
And I think that that's sort of some of the skepticism that at least I'm going to have towards the crypto gaming that's coming not from the gaming industry. But what I think I'm really excited about is you take a top-tier gaming studio that's making a great game and wants to have market mechanics in it, wants to have real user ownership of the digital assets in it. And wants to use, blockchain technology and payment rails and NFTs to enable that. That is where I would guess you're going to see the biggest adoption early on.
That's super interesting. Go into that a little further, because actually that wasn't the answer that I was expecting, but I do find that fascinating because it feels like, by and large, legacy companies they often put out for years now, they'll put out some press release about crypto, and it feels a little bit ham-fisted often. They don't really know how to do it. But your sense is that the bets that you want to place, or at least many of them, will be more on this side of, okay, here is a publisher of a very popular game. Maybe it's a massively multiplayer game, et cetera, and crypto can add something to that. What do you see crypto potentially adding that they'll want to be attracted to? Other than a pop in the stock price after the press release.
Right. Why would they actually bother to follow through on the integration? So first of all, markets can be extremely engaging. We see that all over the place, and adding markets to a game can really help make the game more engaging for users. Many games already have economies built into them, but they're extremely illiquid. Because it's just like some random video game trying to build an economy out of nothing. But if you get access to an integrated financial system that even people who aren't playing the game can get access to outside of the game as well, that can create a much more liquid marketplace. And you've seen a lot of MMORPGs build. EVE Online is an example of this. You look at World of Warcraft has had this. And many games have miniature versions of this. So building out really liquid, exciting marketplaces in-game is one part of it. Making payments easy is another piece of this. And then a third is creating real social identity around in-game ownership and sort of accomplishments, where you have NFTs representing skins that you've bought or won. NFTs representing your performance in the game. You have a gallery that can be displayed in and out of games. You can tweet out your profile from a game. You can have interaction based on your profiles and really bring straight to the user in a real direct ownership sense, an interactable sense, a representation of who they are online. Is sort of like, I think, the other piece of this that has a ton of potential. And to get to your point of, will people actually do this? I think yes. I don't know when, but I can say that almost every major game studio is extremely actively actually looking into doing something tech-wise here. It's not going to happen tomorrow. It's going to be a slow trickle at the beginning, but I think almost all of them have decided that they will eventually take the plunge somehow, some way.
I feel like if we were having this conversation like 6 months ago, maybe we would have talked about DeFi or something before you brought up NFTs. Do you feel like ultimately like NFTs is the thing? And I know that's very broad and some people just associate them with like either really expensive art or weird profile characters. Defined broadly is the thing that sort of brings crypto to something resembling like a mass adoption that goes beyond just pure trading?
I would have given very low probability to that a year ago. Now I would give decent probability to that. I don't want to confidently say that will happen because I think it could be payment rails instead. I think that there's a few things it could be, but I would now put NFTs in that top category probability-wise, along with a couple other things in terms of what brings a non-crypto native audience to crypto for something other than financial investing. Where, whether it's integrating with video games, whether it's ticketing for venues or events or teams, I think that we're seeing really active movements on those fronts, and I think it makes a ton of sense as a product. And it's sort of a pretty clean innovation layer to add on top of the existing structures.
Let's talk about your growth plans, and I'm particularly interested in the U.S. market right now because there is a lot happening, and people in crypto like to complain about U.S. regulations, but when I look at the market overall, I just see more and more happening, and now there's a Bitcoin futures ETF, which maybe a few years ago might have seemed unimaginable. FTX US, one of your subdivisions, what do you see as the opportunity in the U.S. market for that asset?
Yeah, massive. And, the United States generally has the deepest, the most liquid, and the highest volume markets in the world. This is true in almost every asset class. It's also true in almost every asset class that more than half the volume trades through derivatives and futures. This is not a crypto-specific phenomenon. This is, name your favorite sector. Most of the volume's going up in futures. But in the United States right now, crypto is an exception to that. So you look at global crypto volume, right? And I can even just like pull up numbers here from today on what does the sort of global crypto volume distribution look like, and it just looks really different internationally than it does in the United States, where we see $170 billion of volume trading in the last day globally. It's a lot of volume, first of all. That's the same order of magnitude as United States stocks do. But what's the breakdown of that? Internationally, we see it as more derivatives than spot. In general, we'll often see 2-to-1 derivative to spot volume. In the United States today, there's been $1.7 billion of futures volume. It's 10% of the U.S. volume and 1% of the global volume are U.S. futures. You would expect that to be the biggest source of global volume. Right. And what's going on is almost all the volume goes through crypto native players, and none of them have licensing. For at least none of the big ones do for futures in the United States. I think that's the biggest missing liquidity source in crypto. I think that markets could be substantially more efficient, substantially more regulated, substantially more liquid were that there. And, we would love to enter that space and, are working.
So what has to happen? Because right now there are people in the United States that would love to trade perpetual futures on FTX.com, and they look at what's on FTX.us, and it's not there. And obviously, there are all kinds of more interesting things that happen on the non-US side. What's blocking that? Who specifically, and who has to give the green light in the US? Is it have to be on the legislative side, or is it a regulatory side where it's like, okay, this is something that more retail-focused exchanges can start? Who gives that green light?
It's the CFTC. And this is actually within the scope of traditional CFTC licenses. There are potentially things that can be offered to a wide variety of users. And they're pretty broad in terms of what products, both in terms of the structure of the product and the underlying, that you could offer futures or derivatives on. We have a subsidiary, FTX US Derivatives, which has licensing for this, which has a DCO and a DCM, and an SCF actually. And we're actively engaging with the CFTC, discussing the products that we would be excited to launch, talking through those. And, we're optimistic that we're going to be able to really launch some exciting products in that area, over the next year or two. And I think very little is completely outside the scope of what that license could theoretically do. It's all just a question of what we in the CFTC and particularly the CFTC ultimately feels comfortable with. And it's probably going to be an iterative process, but no, there doesn't need to be legislative changes for crypto futures in the United States. That's something that can already exist with licensing.
All right, Sam, we have just less than a minute to go. So real quickly, we sort of think of these two things as dual tracks. What about cryptoified or tokenized traditional markets? What is the hurdle before we really were to see, like, say, companies issuing stock or tokenized versions of stock futures or treasury futures running on crypto rails?
Yeah, absolutely. So, I think the big question that I'd ask is, who would list that product? What exchange would?
Yeah.
Are you looking for FTX or Coinbase to list it? Are you looking for the New York Stock Exchange to list it? Are you looking for some third type of platform to list it? Is Robinhood going to be able to? That's honestly the biggest question, is what licensing would one need to offer such a product? Would it be offered on crypto rails or traditional clearing rails? And I don't know what's going to happen there, but that's going to be a discussion with the SEC.
Right.
And I think you've heard Chair Gensler say again and again, look, we would love to see crypto platforms come in and register. If I had to guess, I would guess that he and the SEC have been thinking about what a regime like that might look like. I would not be surprised to see developments over the next year on that.
Sam Bankman-Fried, CEO and founder of FTX, thank you so much for coming on.
Thank you.
Political change, social unrest, economic turmoil. The future is uncertain. Investors need a new approach, one that embraces technology and a new way of building capital markets. At CoinShares, we believe Bitcoin and blockchain networks are charting a new course. A pioneer in digital assets, we have helped investors navigate this new world since the beginning. From passive investment products to active strategies, from capital markets infrastructure to trading services, CoinShares is the trusted leader in digital assets. As our world changes, so does Bitcoin's place in it. And at CoinShares, we are just getting started.
All right. I am so excited to be here. Thank you to everyone who's tuning in today to this special portion of the Bloomberg Financial Innovation Summit. My name is Meltem Demirors, and you're going to be spending the next hour with me. At CoinShares, we are really excited about everything that's happening at the intersection of culture, the creator economy, and finance. And so we've put together two very special sessions for you. I'm here right now with two amazing individuals who I'm so happy to call my friends. I'm also a collector of their art, and they're also two of the brightest minds and most incredible builders in this new world of NFTs. For those who are watching, I hope you've heard of NFTs, but for those who haven't, an NFT, or a non-fungible token, is basically a type of smart contract that allows people to create one-of-one digital assets. And so right now in the creator community, there's a lot of excitement, a lot of enthusiasm around NFTs. To date, there's been over $8 billion of economic value created around NFTs, art NFTs in particular, just on the Ethereum network. But NFTs are being launched on all sorts of blockchain networks, including Solana, which you heard about probably over the last 2 days, Avalanche, and a whole variety of blockchains. So we're going to delve into this idea of the new creator economy. We're going to start with the art side, and then the second half of this hour will be the music side. So hopefully you like art and music. I think those are two things that most people tend to like and bring us a lot of joy as humanity. So without further ado, I'm excited to introduce Marguerite de Courcelles, aka Coin Artist, and Micah Johnson. Micah and Marguerite, I'm actually going to let you introduce yourselves because you'll do a much better job than me. But why don't we start with you, Marguerite? Just give us a brief overview. Who is Coin Artist, and what are you doing in the NFT space with your company, Blockade Games?
Thank you, Meltem, and hey, everybody. So Coin Artist is my artist brand. I've been a creative in the blockchain space since 2014. I started making gamified paintings, essentially by hiding private keys in both physical and digital mediums using steganography techniques. So then essentially creating online digital treasure hunts where people would race to claim this Bitcoin private key, which was, accessible to all. And so it had this effect of pulling the sword from the stone in the end of these treasure hunts. So that, though, became more elaborate over the years as what happened was the work attracted other engineers, online talent. And so our little team became a super group of talent, which then led to establishing Blockade Games in January 2018. And Blockade was an initiative to create free-to-play blockchain gaming through NFTs being a vehicle in which a player could have this game asset, which could mirror their achievements in game and be transferable and go with them along their journey as a gamer. So currently building Neon District, which is a cyberpunk RPG. And it is basically that mission is how do we put NFTs into gamers' hands in which they can participate in this new global economy around cryptocurrency.
And for those who haven't played Neon District, highly recommend you check it out. Marguerite, where can people go to play Neon District or interact with some of the items in the game?
NeonDistrict.io is the site.
Amazing. Micah, why don't we shift over to you? And I have to disclose, I am a collector of Micah's pieces, and he's done some amazing things with Aku. So tell us a little bit about what you've been building, Micah, and some of the really unique things you've been doing in connecting NFTs to a much larger audience than just us crypto nerds.
No, I appreciate it. Thanks for having me on here.
Yeah, my background was a little different. I played 7 years professional baseball, and that's all I ever did. Never did a job resume, never, had a job interview. And so when I got out into the world, I loved art and discovered art in 2016 when I was playing with the Dodgers. I got out into the world and kept painting and realized nobody was buying my paintings when the jersey was off me, and realized I needed to make money. And that's when I found out about digital art and NFTs and crypto. And that was in late 2019, and put out some works on Super Rare. And around that time, my nephew asked if astronauts could be black. And I started painting him as an astronaut with an astronaut helmet and just sending it to him. I began to animate those and put them on Super Rare. And there was an amazing response to those, and it was really fulfilling. It was like the most fulfilling moment of my life, like seeing the way people like resonated with these paintings. Called a gallery that summer and said, "Hey, I got some works that I think I really like, and maybe you could show them." And they agreed to show them, and they did really well. And I started to think about how I can reach a broader audience with this message, and the real target demographic, which is kids, and empowering them to believe there's no limits to their dreams. And that's how I came up with Aku. And my belief was that, well, not really a belief. I just didn't know anybody in Hollywood or books, or I just said the only way I can release the character was as an NFT. And so I came up with a way to release 10 chapters, seeding the origin story of Aku through like a minute and a half, animated clips. Released chapter 1 back in February, and did, as an artist, I just wanted to get it out there. Did $1 million in less than a minute, and became the first NFT to be optioned for a major feature film. And ever since then, I've been thinking about how I can build something even bigger that can also empower creators to do the same thing and get their story told.
Yeah, and I think what's so interesting is, Marguerite, you're creating these gaming experiences, these really interactive experiences with NFTs. And Micah, what you're doing is you're storytelling, right? You're creating these beautiful stories and these platforms that allow different stories to be told through the medium of NFTs. So both of you are bringing together art, gamified experiences, new types of media, and then injecting in this really cool financial component, because in both of the metaverses, if you will, that you've created, or these new realities that you've created, the assets themselves are not only components of the game or the experience, but they're also financial assets, which I think is really interesting. And this has, after all, the Bloomberg Financial Innovation Summit. So we're going to focus a little bit on where this intersection of creativity, culture, and crypto is happening. So let's just maybe start briefly by talking about, I think, Micah, something you alluded to, which is the challenges around monetizing creativity and culture today, and maybe some of what each of you experienced as you were building both your businesses, in terms of how monetization models today are really, really broken. So Micah, maybe you could just start by elaborating on, as you were thinking about different ways that you could build the story of Aku in different ways that you could, establish your own financial freedom to help you unleash your creativity. Like, what was that relationship like, and what was it like to sort of fund this and figure out how to access capital and build, financial capital around the Aku story? Maybe tell us a little bit about that journey and what you learned through that process for those of us who aren't as familiar with what's going on in the creative space right now.
For sure. I think, we look back on George Lucas's and the Marvels, and they had the ability to build this franchise and build this audience base. And I don't think that's possible in Web 2 anymore. I think the only way to really retain ownership over your IP or your creativity are utilizing the tools in Web 3 to create alignment with your audience. And it's no secret, without that audience base behind Aku, there's no TV, there's no film, there's nothing. And so when I released Aku and I saw how well it did, and I see how well it's doing and all that, I really look at it as an opportunity for an audience and community to invest in the creation and the IP they really believe in. And so that's what motivates me, every day, is to think about how I can drive value back to them as this thing continues to grow and build. And I've can capitalize the company to bring on more people that can execute on delivering value back to them while also building out the IP. And I think that model never existed prior. There was always that dependency in traditional media on distribution to build the audience, Well, now, like, you look and there's, Bored Apes has over 200,000 followers, on Twitter. Like the audience building is very possible now, to have more leverage as you go to get your creativity out into the world and reach a broader audience.
Yeah, and I think one of the things we often talk about at our firm is the 3Ds. So digitization, driverless banking, and changes in distribution models, right? And there, what I think you're alluding to is the ability for you as a creator to distribute what you're creating directly to your fans, right? I also think one of the things we speak about regularly is sort of changing the engagement with fans. Can you talk a little bit about, okay, so I buy an Aku piece, and I did buy one of your first Aku drop, actually, chapter 1, in the sale you did. It's actually the first time I bought an NFT with a credit card, so that was the first for me. But you were worth it, Micah. Aku was totally worth that. That credit card swipe. But talk to me a little bit about how you're engaging with your fans. So they buy one of your pieces. Like, what's the experience like after? And then what's the financial component of how they get to engage in the upside of Aku as the story grows and becomes, more prevalent across these different mediums?
Yeah, I think what's really special about this is being able to have right now is Discord, right? And gating the channels based on chapter holders and be able to really go in there and get information and share information in real time, get feedback on their story, on, the direction of what we're doing. It's building in the open, it's building an audience first and then the product second, right? That's like the new model. I think in this new creator economy, the chief creative officer is actually the top of the organization, the one that's, creating and the one that is engaging with the audience and getting real-time feedback. And so, one thing that's special about releasing, let's call them early comic books as NFTs, is the nature of them being on Ethereum and ETH wallets, and that you can constantly drive value back to them, constantly touch them. Like, it's very difficult to understand, or for Disney to know that my daughter loves Frozen. I go and buy her a Frozen T-shirt at the store, like who I am or how to touch me again. Well, with ETH addresses now, like in these collectors, and you're a collector. Let's say the movie's ready and the movie's ready to come out, and we can airdrop you a ticket to go see the movie. We can airdrop you things for like anything. And so that's what's really special about seeding IP crypto natively, is the ability to continually touch the audience and bring them along.
Yeah, absolutely. And I love that. Marguerite, I think that's something you did really well with one of the first projects you built, Plasma Bears. And you have such a great story about your niece who played the Plasma Bears game. Do you mind just quickly sharing that story? Because I think it's such a beautiful one and really illustrates, I think, the financial upside of some of these games. So maybe you could just tell us briefly about that story, because I love this.
Yeah, absolutely. So one of the first things we noticed as a game company in 2018 was that the new user drop-off rate for blockchain games was about 99%, which is incredibly high. But once committed, those users had a 10% higher user spend rate. So the problem then is, how do we lower the barrier to entry? So Plasma Bears was a free-to-play game that we designed, a proof of concept, separate from Neon District. So it was its own IP, own brand, as a way to do something highly experimental, because we didn't know if it was going to work or not. So basically the commitment we were asking for participants was basically to give their time, play this Build-A-Bear type crafting game of these somewhat emo, angsty bears that had personalities. You would take them on text adventures, and you would collect new bear parts. So my niece was one of our play testers. She went and played this game all on her own. She actually enjoyed it so much, she went and completed these different bear sets, and it was built on layer 2 technology at the time. So that's how it was able to be free to play. So the game company is providing all those transaction fees on the back end because they're very cheap. Anyways, we built a transfer gateway at the time to allow players to transfer their bears that they wanted from this layer 2 to Ethereum mainnet. Only 1,200 bears at that time were transferred, and my niece and her mother were actually one of those users that made that transfer. So come 2021, it turns out that one of our we collaborated actually at the time with a lot of different artists in the space, and one of those being Xcopy. So Xcopy is now a very famous artist, and his work sells for quite a bit. So people found these bears, found out that Xcopy had been an artist, and now we had Plasma Bears, so Xcopy Plasma Bears selling upwards of 100 ETH per bear. So my niece, who and her mother figure out these bears are selling so well, she ends up getting all these offers on her bears. I'm getting messages from my sister saying, is this real? Is this a joke? This can't be real. Like all these offers coming through on her email from OpenSea. So anyways, my niece records a video of her day of selling $60,000 worth of plasma bears that she had made through this free-to-play NFT blockchain game.
I love that.
Like, I just love this story because here we have so many different things coming together, right? We have the gaming component. We have you using the platform to help, give different artists opportunities to showcase their work, reach a new audience. And then I think one of the fun things around NFTs has been the joy of discovery, the joy of curation, and these collections sometimes, or these pieces of art will take on a life of their own once a few people start collecting them and the status of these artists is elevated. These works can sell for quite a bit. And the other great piece is, the royalties on it. Typically, when a secondary sale happens in the art market, the artist themselves doesn't have any additional upside other than being able to sell new works potentially at a much higher price because their credibility and their brand has grown. But in crypto, right, and with crypto art, we can embed a transaction fee. This is sort of the driverless banking component. We can embed an ongoing secondary market fee in, meaning no matter what happens, every time that piece changes hands, and say it changes hands for a lot of money, the creator, the original artist who worked on that piece, or potentially a group of people, right? Say the platform, the game, the artist, and a variety of different people who collaborated on that. Or in the instance of Aku, right? The creative, the writers, use the artists, Micah. You could actually have groups of people who can actually participate in that value creation, which I think is so exciting and so fun. For people in the audience, though, so they're looking at this crazy NFT world. It's very confusing. There's a lot going on. As you look at where NFTs are trending, we just had an incredible week of events in New York around NFT NYC. Maybe give us a peek at the future as investors, as people who are thinking about portfolio allocation and where to store our wealth in an increasingly chaotic and volatile global macro environment. What are places in the NFT space that you think investors should be looking? What are the opportunities you're excited about? Is it creator coins? Is it buying collections themselves? Is it, participating in these platforms and participating in the growth of these communities? Give me just a sense of the different ways you think investors can engage. And Marguerite, maybe we'll start with you.
Yeah, what's so interesting is this experience of being in New York. It's really come to light how much people enjoy the in-person experiences and ideas like minting in real life, exclusive events that are so decked out, as far as like Dapper put on an interactive architecture exhibit as one of their events. And anyways, I guess the space, both online or virtual realms, and our identities, and the physical realms, I'm not quite sure. It seems like the space is trying to push development in both directions at the same time, and the convergence of these two experiences, because I'm not sure if humans actually, when they're in person, they like being in person. They don't like to do augmented reality necessarily. And when they're online, they like being online. So how do these two realms come together simultaneously, or do they not? I think that's something even me as an investor, I'm thinking about, because the questions I have are are we actually trying to converge the two? Or are we actually just focusing on this concept of identity? And if it's this idea of identity coexisting across two different realms, how does that have a center point and become the node and focal point of these developments?
Yeah, and I think that's been really interesting to think about, particularly because I always joke in the metaverse or in cyberspace, my multiple personalities can finally all exist and be their own independent financial entities, and people will have pseudonyms or multiple wallets where they're interacting with NFTs and games in different ways. So I think it is really interesting. Also, just seeing what's happened with PFPs or profile picture NFTs and the way those have blown up and the way people are using those to express their identity in terms of belonging to a tribe, whether that's Bored Ape Yacht Club or CryptoPunks or, Ether rocks. I myself identify as a rock. So there's all of these different profile pictures that people are buying and really identifying with, and they're using that as a starting point for gathering in physical space. Micah, as you think about sort of the investing side and as you talk to people who want to invest in NFTs, where do you sort of direct them to look, or where do you think the opportunities are for people who are looking at how they integrate this investment thesis into their own portfolios?
Yeah, for me, I think I always believed that like story and IP would be the bridge between the mass adoption of crypto and NFTs. And it won't necessarily be the infrastructure or the technology, it's the IP. Like you talk about CryptoPunks or Bored Apes. Like you look, Jay-Z got a CryptoPunk, right? Steph Curry has a Bored Ape, right? It was IP that was the bridge between mass adoption. And so just looking at, from an investment perspective, looking at the communities that are really engaging and have an identity, I think is the most important thing, a core identity, because that will always like withstand the test of time and withstand bear markets, is like an identity and something that you can always is recognizable. And I think that is really what's really special about the community that's being built around Aku. I didn't build it. Like they built it, the identity. And that's something that, is really, valuable to as we grow. And then the audience grows, that there's still an identity they can resonate with and a creed or ethos that represents that community.
Yeah, and it's been amazing, like just watching both of you as your platforms and brands and your work is evolving and changing. It's just been incredible to see, and I'm so excited to continue to be able to watch and learn from you as you grow. As an investor, Marguerite in Blockade, and then Micah is one of the collectors of an Aku piece and someone on the on the journey, the story. So we have a few questions. I think we can spend the next few minutes taking audience questions. We have a question from Mari. What about the argument that digital art can be copied in perfect fidelity? I can own every CryptoPunk ever for free. So right-click save is a common meme that's used in the NFT space, where people will say, oh, I can just right-click save and now I own your NFT. Does one of you want to maybe explain why right-click saving on NFTs is not the same as owning an NFT?
So I guess back when I was first learning about Bitcoin and how does this idea of internet money work, and how come you can have this, it took me a while to understand how distributed networks work, right? So with these tokens, there's unique identifiers associated with them, so that the entire network validates that these items are the true items. And even though on the surface it may look like however the information is being portrayed, it could be the music, it could be any sort of file experience, virtual experience, that doesn't necessarily mean that it is the agreed upon asset that has ownership rights to it on the network. And those ownership rights can carry multiple different meanings. And I don't know if, Micah, you want to talk about that.
Yeah, I think what it goes back to, if I'm like CryptoPunks is a community that token represents your position in that community. And as this thing grows, we're so early. As this grows, who's to say Larva Labs doesn't say, okay, now all CryptoPunk holders get this, right, or that. That is something that we're still early. We got to think 5, 10, 15, 20 years down the line. Owning that CryptoPunk could get you something that and just by being part of that community. Right now it's identity, right? Right now it's identity, but there's utility that can be baked into that forever. And so that's what I really think the big difference is from when I think about IP or a PFP is there's utility that's coming. It's very possible, a lot easier than just I don't know. That's the value in my opinion.
And we actually did that this week. So for Ether Rocks, there's only 100 of them. We actually threw a party in physical space for Ether Rock owners and their friends. and your entry ticket was your NFT. So you could right click and save a picture. But I think we're also starting to see that there are a bunch of NFT communities that do special artworks that are only available to access to people who own, something from the original smart contract. And then Micah, as you were saying, the ability for you to know all of the collectors in the world who own an Aku piece in their wallet, and to be able to, pop a movie ticket into those wallets, or to drop them an NFT is super fun.
No doubt.
To add to that, though, like, for example, the game application Neon District, you can have all kinds of pictures that look like Neon District game characters, but in game, you're only going to be able to combine and level up the assets which the game is reading from the blockchain data that this is the correct Neon District assets. So that utility is actually already, apparent today.
Yeah.
And I think that's what's so amazing, again, is we have these new tools, and people like both of you are building these new realities where we can use these tools in new ways. That is all the time we had for today, unfortunately. There's so many more topics we could discuss, and hopefully for people who are watching, you can feel just the enthusiasm, the excitement, like the absolute electric energy that is happening right now in the creative space around NFTs. In our next session, you are going to hear not about NFTs necessarily, but you're going to hear about creators in the music space who are changing business model for the music industry and monetizing their own platform, their own brand in new ways, and engaging with fans in new ways. So thank you, Marguerite. Thank you, Micah, so much for your time. I always learn so much from both of you, and hopefully everyone in the audience has had a chance to do that today as well.
Thank you for having me.
Hello, everyone, and good morning. I am Meltem Demirs, and I'm so excited to be here with you today for a really interesting session. I know this is a financial innovation summit, and you may be asking yourselves, what are two DJs doing at a financial innovation summit? Well, we're going to find out. So I'm the Chief Strategy Officer of CoinShares. We're a publicly listed company, and we manage $7 billion in assets across the platform of exchange-traded products. We have a trading arm that engages in electronic trading and electronic market making, and I have the most fun job. I focus on our investment portfolio, including venture investments and principal investments, M&A, research, and I also get to figure out what's going to happen in the next decade and how to position CoinShares around that change. So on my journey of meeting some of the most interesting people working in the crypto space, I've had the great joy of meeting these two fine humans. We have with us Blondish, who is an incredible DJ who I've been a fan of for a very long time. And I learned only recently that she's also a prolific crypto investor and someone who's been building her own platform in the crypto space. In addition, we have Andre, who's part of RAC. He's also an incredible DJ and someone who has also been using this technology in really unique and novel ways, not only for his own brand, but he's actually now building a business that he's fundraised for and is doing a lot of really interesting things with DAOs and larger groups of investors. I will also add a disclosure. The three of us are actually in a DAO, or a decentralized autonomous organization, together. It is called Dow Jones, or DAO Jones, is a fun little play on words. And so we've really enjoyed going through the process of investing in the crypto space together through this really fun collective of humans that we've assembled. So Blondish, Andre, so excited to have you both here. I think what we want to start with is really learning more about you and how you first heard about cryptocurrencies. What year was it? What were you doing? What was going on in your career? And what you've been up to since then, leading up to this moment, which is a huge week for the creative space. It's NFT NYC week. There's a lot going on with creatives, a lot of energy. So give us a quick overview. Blondish, I'll start with you and your beautiful top bun.
Yeah, for sure. Just to give everyone a little background, I'm Blondish. I'm a DJ, producer, really passionate about environmental activism, serial collaborator, and a straight DJ when it comes to crypto. Since a young age, I've been really into music, thanks to my parents and zeros and ones. I have a major in computer science from McGill. And finally, my worlds are colliding, my passions of music and crypto. they're at the forefront now, and I'm just exploring this intersection. And honestly, I'm here because I'm not happy with the current systems we have in place. I never felt like I fit into them. So naturally, I'm here to help, make starving artists a thing of the past, and also, just to lead humanity closer to freedom, abundance, and freedom, abundance, and happiness. And crypto is kind of a gateway to that. With all the secrets of DAOs and Web 3.0 and culture and all that convergence. There's a lot of beautiful stuff there.
I'm going to a little more though. When did it first click for you? Like, was it Bitcoin? Was it Ethereum? What specifically was it that you saw that made everything click? Because I think everyone has that aha moment. So I'd love to know what that was for you.
The aha moment was when it was in 2017. I was actually, I had a friend in Barcelona who was just like, he basically took me through everything, like how to do it. It's like there's a big kind of learning curve to kind of get into the crypto space. But when you get into it, then you kind of go different rabbit holes. And the aha moment was, I don't know, I guess I was with a bunch of women in LA, and they were going to be block producers on EOS. And they kind of asked me to be in there, and just seeing how rich the community was then. And I was like, wow, I felt like I fit in, and that's kind of when everything just changed.
I love that. I actually think that group was called Shios. They were a group of all women who were one of the big block producers in the EOS network, and really active in its governance. That's fascinating. I think that definitely resonates with me as well. I started in Bitcoin in 2013, but I think the moment where a lot of different things came together for me was being in a physical room with a bunch of people who were like me. I was like, wow, these are my people. We all get it. Amazing. Andre, let's move over to you. I'd love to hear, how did you get into this crazy wild world of crypto? What was your sort of gateway or aha moment? And what have you been up to? I feel like you've been doing some really strange, interesting things. I'm always hearing about things you're doing just through the ether.
Yeah, well, first of all, thank you for having me. I'm stoked to be here. Like Blondish, I have a bit of a background in computer science, so I've always been interested in this technology, and I always felt that I can see sort of a long string or a long thread, even dating back to like the Napster era and like BitTorrent and like all these technologies, decentralized technologies sort of emerging, so that musicians like myself could use them. So I've been sort of following this thread for a long time. I think my aha moment with Bitcoin was maybe like late 2016. I was sort of in between albums. I think I was maybe a little bit bored, had more time on my hands, and I was like, okay, well, let me finally dig into this. I've been hearing about it for so many years. I understand the technological side of it. Is like, what does this mean on a cultural level? Like, what does this mean for the music industry? It doesn't mean anything. I don't know. Is it just an internet currency? So that eventually led me to stumble on, probably through the YouTube algorithm, recommended me a video by Vitalik Buterin talking about Ethereum. And I sort of look back on that moment as sort of a very pivotal change for me, where it was like, oh my God, this could be everything. This, it could either be nothing or everything, and it's not in between. So that was a very big moment for me, and that was a big year for me. Like, I won awards, like it was the whole thing. Like, I was traveling everywhere, but like this kind of like solidified something in me, and I became obsessed with it. I read everything, kind of like, we always talk about like going down that rabbit hole. I went down that rabbit hole and never really looked back. So just briefly, I've sort of been playing around with this technology ever since. I mean, since I think early 2017, I had an album coming out at that time. So we actually had the first album on Ethereum. We had a little smart contract that if you deposited X amount of Ether, you'd get like a zip file sent to you. It was like something very simple like that. But the idea was really powerful, and I think, we'll probably get into like some of the problems in the music industry and like how we're trying to solve them. But, that direct to fan interaction is so incredibly important, and being able to own that and bypass all this sort of distribution layer problems that we have was very symbolic and really important. So, that's sort of been the genesis of a lot of things I've been working on, and always in the spirit of experimentation. I see it not as purely just a financial play. Like I really see this as being sort of being able to change the underlying foundation of like how we interact on the internet, and how especially the music industry works on the back end, in terms of royalty payments, in terms of like attribution, provenance, like all these sort of issues that we're dealing with now with NFTs. And maybe NFTs are sort of that ultimate solution, but this was something that was like very dear to me, and something that I had seen as a major problem. So I became sort of hyper focused on this, and have experimented with a lot of projects, like from social tokens. I have my own social token. Whether that's we had the most, we basically created a Uniswap pool for a physical cassette tape, and through market dynamics, we basically had the most expensive cassette tape of all time, beating Prince. So I feel incredibly proud of that experiment.
I don't even know how to play a cassette tape anymore. So hopefully the world's most expensive cassette tape comes with a player of some kind.
It's funny because it doesn't, and we can get into this, but what's the most fascinating part of it is that it was really just a token, and people only wanted to hold the token. And when given the option of redeeming, 70% of people didn't even redeem it. They just held the token. They'd rather have the digital item than the actual physical item. So we have a bunch of unredeemed tokens or cassettes that just haven't been redeemed. People would rather have the thing, the EOC.
We're diving really deep. I want to stop for a second and sort of bring us back up. So first of all, I want to note that this panel is truly phenomenal, because here I am. I'm supposed to be the cryptocurrency expert, yet I don't have a computer science degree. I have a math and economics degree. And here I have two DJs who are computer scientists and engineers. So I just think it's absolutely incredible. And it's been amazing watching both of you as well, just being absolute leaders in your field. And I think, again, really pushing the envelope of what's possible. So this panel is called From Creators to Owners, and it's about the creator economy. And I think, Blondish, you made a really great comment. You said we want to get rid of the starving artist. And I think one thing that a lot of people don't understand, or maybe don't appreciate, that we talk a lot about in my business, which is a financial services business, is how distribution models are changing due to the changes in how people consume content, right? I remember being a teenager, and I would go to the store and I would go to the CD section, and the only things I would really see, right, pre-internet, were whatever was on sale in that section, or whatever was on Billboard or MTV or VH1. Then the internet came along, and I was a huge user of LimeWire and Kazaa and BitTorrent generally, and I started getting exposed to a lot of different music, and my taste broadened a lot. And due to that model, right, with piracy, we shifted to the streaming model, which is now the prevalent model. But I think the economics of that model have been really challenging for artists. I know, Blondish, you tour a lot. I know a lot of artists have to tour quite a bit because it's not really so easy to make money off of plays. I'd love to hear a little bit about how this shift in monetization, how you've been using it to sort of help your business grow, help your brand grow as a creator, and how it's changing how you engage with your fans, but also how you engage with other artists that you collaborate with. Because I know, Blondish, you've been absolutely so prolific in bringing other artists up and giving them a piece of your platform and letting them, speak to your audience. So maybe we'll start with you, Andre, and then go to you, Blondish. Talk a little bit about how the economics are changing and how you're using this to evolve the business of music.
Yeah, absolutely. So, people talk about piracy as this really negative thing, but piracy is really just a side effect of the music industry completely royally fumbling the move to the internet. Piracy existed. Yeah, sure. Of course, people want free music, but I think a lot of people, myself included, Napster, would be willing to pay for it. It was just more convenient. I mean, it was just better than going down to the shop and buying a CD, like you said. So, even Spotify, to some extent, is still a reaction to that one very bad decision that the music industry made in 2001. So, once the financial side of just so people know also that the streaming model currently, as it stands, if you're an independent artist, you make about $4,000 per million plays. So think about the level of sort of mass scale that you need to reach to make a decent living. It's kind of incredible. So and it's quite challenging. So I think that pricing model doesn't really make sense, and it really tends to favor the people at the top or the people with the power. You were talking about people, or like when you went to a store and there was a display. Those people that control that display are still very powerful in the music industry. So, we're trying to, the leveling of the playing field is still ongoing, but that pricing model is still very challenging. So, there's a lot of ways that this could go, but that's sort of like the underlying problem we're trying to solve at the moment.
And you've built a platform as well, right, to do this. So tell us a little bit about the platform you've worked on, Andre. I don't know what what insight you can give us, but we'd love to hear just a tiny bit about that. And then Blondish, definitely want to hear about your platform as well.
Well, I think it's what we're sort of trying to create is like basically be our own ecosystem, at a very high level. We're just trying to, sort of control like our interactions with our fans and not go through so many intermediaries. And there's a time and place for those people. I don't think it's always, especially in crypto, there's a lot of like anger towards intermediaries, but sometimes they provide a good service, but sometimes they take too much. So it's sort of like somewhere in the middle where at least I have sort of the power to control that, and I think fans definitely appreciate that interaction. And when you do it on a smaller scale, and I think I'm the first to recognize that I'm not like a massive artist. I'm certainly successful, but not like on the level of some other people. So like a very the way the economics work, a very small fan base, active fan base can actually be far more sustaining than the Spotify model where you need to reach millions and millions and millions of people. So, you can probably, make a very good living off of 1,000, maybe 2,000, 3,000 people, which is a lot more manageable and a lot more easier, like on a human level to like interact people. So, that's sort of a broad overview of like kind of what we're trying to do. I'm very curious, Blondish, like what your take is.
I mean, yeah, you said a lot there. It's about, removing the gatekeepers just so that we can have more freedom to be creative. You know what I mean? When we're only getting a small piece of the pie, or when artists are only getting a small piece of the pie, it also affects creativity. You know what I mean? Because you don't feel that freedom. So you said a lot with that Spotify stuff. And I'm moving towards my own social token as well, because I can see that, I want to go always back to the cyclical laws of nature. And the whole fandom experience was kind of one-sided. People can like your posts, they can buy your music, but what is the fan getting other than consumption? So it's about how do you get that feedback loop to go, to start like that. So through a social token, you can deeply engage with your fans, and they're not even your fans anymore. They become your community and your family, because you are all kind of invested into this. It's a currency, it's energy, right, of an ecosystem. So I'm going to do that through Ish. I'm going to launch it with a social token issuance platform called Pools. It's like a protocol built on top of Ethereum. And they've figured out, it's like an AMM, but like an automatic market maker. And they've also figured out ways to use DeFi. So now when you have liquid ownership in your favorite artist, you can also add layers of DeFi onto that and open finance to kind of even grow the value even more. So I'm just going to give a bunch of utility and use cases to this token, because everything I do is about energy, right? So energy around music, energy around crypto, and all this knowledge that we're learning to share this with the community, and also around wellness, because we also have to be closer to ourselves and learn about ourselves to really show up and live our truth in this next phase.
I want to touch on something you said, because I think you said it so well. What I think is really cool is when I first got into crypto, it was all about finance and tech, and it was a lot of engineers and a lot of finance people. And it's so funny. I've always said, like, I'm not cool at all, but I love music. I've been to both of your shows, and actually I was a huge Blondish fan. I fangirled over you, Blondish. So when I met you, I was like, oh my God, this is amazing. But one of the things I think is so interesting is culture has always been a very viable form of currency. We just haven't really had a way to value it. And what I think is so cool with what's happening now in the NFT space, and we had another panel before this about NFTs and artists making, physical and digital art. Now we're talking about music. You talked about energy, Viv. Like, this is very real, but we haven't been able to attach financial value to culture. And what I love about what we're doing now is we're turning culture into currency, the actual currency, and we're making it financialized, enabling people to lend it out. There's a really cool new protocol that allows people to leverage their social reputation to obtain leverage. So imagine using, your catalog as collateral to obtain leverage so that you can build something. Imagine, crowdfunding a show. Imagine crowdfunding an album. Like, there are all of these new things that now become possible. And as you said, Viv, like, it's a really interesting model for me as a consumer of what both of you create. Historically, I haven't had any relationship with you, right? I go on SoundCloud or whatever platform, I listen to your sets, but unless I'm on social media and somehow, we're connected, there's nowhere for me to engage. But I think this really cool thing is emerging where your fans and your listeners, and as you said, Andre, right? Like Dave Portnoy from Barstool Sports, he said, just find 100 crazy people who will buy a t-shirt from you. Like, start there. And there are hundreds, if not hundreds of thousands of crazy people out there who will buy cassette tapes as digital tokens, or they'll buy your creator token. So I really do think there's this really amazing opportunity for us to bring capital and culture closer together in a way that actually makes it much easier for people to co-create with you, right? Because when you DJ a set, it's not you playing to an audience, it's you creating energy with that audience. And now you get to do that outside of your shows as well, which I think is so fun for me as a consumer of what you create. Blondish, did your thoughts back to you?
No, but you said so much stuff that I want to touch on. But now, yes, exactly. And now you can align that energy around the token that has value, and you guys can keep creating with it. And I mean, just a little story. I mean, now that culture and community is now a tradable asset, a very hot tradable asset, and it will be much more in the future. It's just like institutional. I'm sitting on fun calls. I'm a musician, I'm a DJ and a DJ, but institutional investors are calling creators to understand what is the future of art, because art and finance is now colliding, you know what I mean? And we're at the center of it. And they want to understand what's the pulse on the market from us. And also these investors and different infrastructure, people that are products that are being built on top of blockchain, they understand they need creators in their investment, in their investment side, because they bring the culture and, the authenticity and a just different perspective. So they're actually keeping allocations for creators, which is, I find it incredible.
We were joking about this last night. I was at a dinner with a lot of artists, and they were saying, when artists get together, they talk about money, they talk about capital. And when capitalists or finance people get together, we talk about art. So it's funny that we're now meeting in the middle. But we have just a few minutes left. And since you are both so plugged in and you're building this new world and this new market, let's give our audience, as we say in the crypto community, a little bit of alpha. As an investment theme, where are you allocating your capital? What do you think has a lot of promise? Are you investing in specific creator tokens and technology platforms? Like, what's a way that you might express this investment theme? And I'll start with you, Blondish. I know you mentioned a few ideas already, and you and I have co-invested together a bit. Let's start with you, and then Andre will end with you.
Yeah, sure. So, I mean, I jump between NFTs and DeFi. I'm really exploring DeFi 3.0. I really I'm deep into understanding how to play with tokenomics. I really love that game. But not to the Mark Zuckerberg thing. The metaverse stuff has jumped big time. But I think if you haven't jumped on that right now, maybe wait a little bit, because it's gone up 300%. But I'm going deep on gaming, crypto gaming. Yeah, for sure.
So my investment thesis is kind of all over the place too. I tend to focus more on the platform level or on the protocol level. So I've invested in Zora, OpenSea, some of the underlying stuff. Every once in a while I'll take a small bet on something, that maybe would be categorized as degen. But
Shiba,
but that's
sold too early.
I did sell too early. I bought Shiba in January of this year and I bought way too much, and I sold it for a measly profit. But anyway, I'm not a trader. I'm really not that kind of thing. So I tend to focus on more platform level stuff. Anything that it's the classic example of in a gold rush you sell the picks. So I tend to do that. I'm kind of really all over the place in terms of that. But with social tokens, I tend to invest in my friends and people that I know, something I have a very tangible connection to. I think that it just from an investment perspective too, it gives me more insight into what they're thinking. And there's maybe a downside to that. It can give you some blinders sometimes, but I tend to keep it close, and focus on stuff in my immediate vicinity.
Well, there you have it. This is some of the best alpha I think we're going to get throughout this whole event. I'm so grateful to both of you during this very crazy, very busy week for people at the intersection of culture and capital, that you've made time to be here with us today. It was such a pleasure to hear from both of you. I am always learning new things from both of you. I've been so inspired by your music, and now the opportunity to work together and invest in things and build this new world together has been really exciting as well, to be able to capitalize platforms that we believe in, to invest in creators we believe in, and to do that together has just been such a joy. If you don't follow these two on Twitter or Instagram, they're both very active on social media. I highly recommend it. I think you will get a lot of value out of their insights and what they're sharing with their audience. And also, as they drop new projects, new tokens, you will have a first look at what these two amazing humans are doing. Thank you so much. And I hope to chat with both of you again very soon.
Are you ready to grow your business? Venture into one of the strongest and fastest growing economies in the world, Qatar.
Doing business in Qatar is easy, efficient, transparent, and getting simpler by the day.
Get unparalleled market access and support by setting up at Qatar Financial Center. 100% foreign ownership and many, many other benefits.
Hello, and thank you for joining us here today. My name is Sarah Aldirani, and I'm the Chief Communications Officer at the Qatar Financial Center. Here with me today is Henk Hugendorn, who is the Chief Financial Sector Officer. We at the QFC are Qatar's leading onshore financial and business platform, located in the capital city of Doha. At the QFC, we act as a catalyst for financial innovation, whereby we help license firms from all over the globe to come set up their business in Qatar and expand to the region. Before we begin today's session, I would like to thank Bloomberg for organizing the Financial Innovation Summit. We are proud to be sponsors of this edition, where we will be hearing from global experts coming together to discuss the next generation of fintech and what this means for institutions, their clients, and society at large. Henk, I'd like to begin by asking you, what are your insights and how do you see Qatar's financial services sector evolving?
Yeah, so Qatar is a very ambitious country, very rich country. That's why we have a relatively oversized financial sector. And we see a growing local financial sector with 15 local banks, including one of the largest banks in the region, QNB, Doha Bank, Commercial Bank, and recently some very large Islamic banks like Dukhan and Mashraf Al Rayan. On top of that, QFC has hosted most of the international banks that do business here, the Chinese banks, the usual names, Goldman Sachs, Deutsche Bank, Citibank, etc. So there's a lot of business here, and we all need them because the country is growing. And in the slipstream of a financial sector, there's also a large insurance sector, and followed by all the parties that would like to do business, not only with the largest sovereign wealth fund that we have here, but also local boutiques and asset managers.
Financial innovation is certainly a key national priority. How do you see the future of the sector evolving in Qatar?
Yeah. So in Qatar, we are not different than other regions, I would say. In general, the banks need financial innovation. They have been, to a certain extent, be a bit behind. That's why they partner now actively with the fintech sector and the digital sector. And Qatar is on a fast track. And I see all the banks working with fintech companies and digital companies, and this is very much encouraged also by the regulators. And the regulator has basically announced the Qatar Fintech Hub as a national fintech strategy in which they encourage the banks to work with innovative parties.
You touch upon the national fintech strategy. Could you also touch upon how the Qatar Financial Center's own strategy helps to support and enable growth opportunities in financial innovation?
Yes, of course, we are the business-to-business platform, so we attract financial sector players, including fintech, and we are a recognized business developer by the central bank, next to the Qatar Development Bank, and attract fintech to Qatar that we introduce to financial sectors and solve their needs. What we have done is we create a special license for fintech companies, which make it easy for them to set up. We also create a low-cost lending space, like a co-work space, and we actively introduce them to possible customers and to possible investors. On top of that, the Qatar Development Bank, our partner, has an accelerator and incubator program, and we all work very much together. I think that is a differentiator if I can compare Qatar with others. We actually do teamwork when it comes to innovation.
Thank you, Hank, for your insights. I'd like to thank the participants for joining our session. This concludes our segment.
Hi, everyone. I'm Shanali Bassick, financial correspondent for Bloomberg Television and Bloomberg News. With me, I have Max Levchin. He is the CEO of Affirm, one of the leaders in the buy now, pay later space that has simply been exploding and really targeted as a key competitive industry to the biggest banks. Max, thank you so much for joining us. You know, when we talk about buy now, pay later, I think we really have to start with the underwriting process. There's this sense that you're able to capture consumers that are left out of the traditional credit industry. Who's being left out, and how are you changing that?
So that's a great sort of a thing to point out about BNP. I'll give you a 5-second story. We were just chatting before. So 25 years ago, when I was a lot younger and infinitely less aware of how the world works, I came to the US as an immigrant, and I promptly went to a very good school for computer science and had no credit record whatsoever. Not only that, I also took out a credit card on campus like everybody else did back then and had no idea how it works. And so missing a couple of minimum payments trashes your FICO score, and having no credit history basically renders you credit invisible. Now, at the same time, I was about to graduate with an extremely employable degree in the early 90s while the web was exploding. So anyone in their right mind should have been offering me excellent credit ratings or at least credit rates. And instead, I was declining credit day after day after day. And so immigrants, especially immigrants with excellent education and earning capacity, folks that have stumbled in the past through lack of understanding how the world really works, and then taken a decade to correct their FICO score, so on and so forth. Like that's a giant pocket of availability. And then just lots of people in the last 10 years that have actively opted out of credit cards. The millennial and Gen Z generations both watched 08 with horror and basically said, okay, so borrowing money gets you into trouble. I can't understand the fine print. I am just not going to use them. And so the debit movement is very real. There are a lot of people out there, most of them young, that said credit cards are for special emergencies or not at all. And they have neither the credit nor the credit history because they're not using a revolving line to build it up. And so these folks are all, what I would say are generally speaking, doing the right thing for themselves financially, but are not helping their credit score. And you have to build new models, new ways to underwrite to include them in the system.
Well, I think there's a common misconception about buy now, pay later, where people think that if they use the product, that there's never an interest rate associated with it, that they are not subject to fees. There's still a need to really read through the fine lines, especially as this industry grows, right? I mean, what would you recommend consumers be wary of?
Well, I'll quibble with one thing, not with Affirm. One of our core values of the company is no fine print, sort of answering my own point from the previous question. So we've been in business for 10 years. My proudest stat is we have never charged a single penny of late fees or any really either kind of fees, which is great. That said, there's definitely, every financial product is something that the consumer has to understand. In the case of, and the nomenclature is still obviously being hashed out as it's so new, what Affirm typically calls split pay or pay in four most often does not have interest associated with the consumer side of the equation. Most players, I believe, charge late fees. We do not. Some players charge all kinds of funky fees. That is an allergy-inducing behavior from Affirm's point of view, and so we of course charge none of those. And then there's also pay over time, at least that's what we call it, or a variety of other monikers. And that's where you can borrow and pay over still fixed terms. So there's no revolving over months, sometimes even a year and a half, et cetera. And in those situations, in our case, roughly half the transactions are interest bearing, and the other half is 0%, where the merchant basically subsidizes the cost on the consumer side. In all of our cases, there are no late fees, there is no deferred interest, there's no gimmicks, and that is a quintessential piece of who we are and how we conduct our business. I don't think that everyone must do the same thing, but we certainly believe that our success and our brand is in a large part due to this idea of not kicking the consumer when they're down and trying to make money in sort of the, oh, you're late, great, now you'll pay me more.
So what's really the barrier to entry in this industry as so many more people start to adopt it, including some of the biggest card companies and banks in the world?
So I think, as an entrepreneur, you have to believe the barriers to entries are there to try to jump over. So it's always good to have a competitive market. Our advantages in what I think is really the moats that we've created around our business have been, we are a real engineering shop. If you look at our partnerships, anything from Shopify to Walmart to Target to Amazon, all these companies are enterprise grade, demanding, if you will, from their scalability, from the scalability of their partners, the reliability, availability, all of those things cannot just happen because you're really good at marketing. You have to build a real engineering team. You have to be really, really focused on being there for your partners. And we've really invested in it. Obviously, my background, the DNA of the founding team, the DNA of the larger team is really rooted in engineering. That has been a winning feature for us. The other side is sort of where we started. You have to be good at underwriting. Like, we've lived in a decade of very benign credit environment. You can sort of believe that maybe it's all going to work out, but everyone who's been in financial services long enough knows that it goes up and it goes down. You have to be very rigorous. You have to constantly test your models. You have to understand how to manage risk. We believe we're very good at it. You can look back at our public numbers. We have managed through the pandemic, before, after, very, very well, and continue to very much focus on risk management. The part about being consumer friendly is core and true and important. And I think a huge barrier to entry or competitive moat for Affirm has been this consumer delight, where when the customer calls and says, hey, I'm late by 3 days, what's the late fee? The most delightful thing for all parties to say, there is no late fee, please get current, and all is the same, the price does not change. Over time, as you repeat on Affirm, you realize that it is a better alternative than a credit card. Credit cards will absolutely charge you interest. It'll compound, and there'll be a late fee. And none of those things apply to Affirm. We don't use compounding interest. It's always simple.
There's this point that you made a little earlier, though, too, about the credit cycle that we're in. And I'm curious, and this doesn't need to be only about Affirm. I'm really asking a question about the industry of buy now, pay later. As we face markets that may not go just one way forever, do you think that there are some concerns in the broader underwriting process across the industry? Will some people lose money here?
In the immortal words of Warren Buffett, when the tide goes out, you'll know who's swimming without pants on. I think it's certainly not my job or ability really to see the underwriting methodology of other players in the space, but I can speak to Affirm's relatively competently, and we spend an enormous amount of time making sure that we are prepared and that we have both the early warnings and the controls and the systems to manage credit. But I do think that that's when you get tested. That is what ultimately distinguishes those in credit space from those that really shouldn't be in it. What happens when the economy goes down? I certainly believe that there will be players that will find themselves watching their losses widen and having to deal with that.
Max, it's funny. I think every time I talk to you, I ask you about the secret sauce. What's behind the technology that makes Affirm different? I mean, and again, you've been part of the PayPal mafia. You know how payments work. You've built this system to do it differently. So what inputs of data do you take about your consumers that may be different from how the entire banking industry has done this before?
And as I've said before in these conversations, if it was just one thing, like the one thing you have to know, it would be hard to defend. Presumably, over time, people would erode that advantage or take that away. There's certainly a handful. In terms of kind of the cut dry answer, what is the data? It has to be a whole collection of new features that, and you have to continuously mine for them. Feature in the machine learning sense of the word, you have to continuously look for new signal as you try to eke out another little bit of approvals without increasing your losses. And we look for it both on the anti-fraud side of things as well as the credit underwriting. Credit is made more complicated, of course, because there's a significant body of regulatory restrictions on what you can and cannot use, and you have to look for all that extra yield while staying very, very straight and clear of any regulatory prohibited methods. That said, the one thing that makes Affirm very unique, we went through the trouble of building a two-sided network. We know what the consumer is buying. One of the things that's true for pretty much every major scale payment network, the issuer and the acquirer are a different bank. That means that the merchant where you transact is known to the issuer, but the merchandise is really not. There is a lot of value in knowing what it is people are buying. If you can sort of imagine what is your repayment profile, your willingness to settle your next bill, if there's pressure in personal finance, it has to be different between a bicycle that you used to get to school or to work versus something that you've already long consumed. I think those are fundamentally different. Credit card industry, traditional banking, traditional lending, generally speaking, does not differentiate for lower ticket items. Like obviously, when you're buying a house, the bank very much knows what kind of house you're buying, and that underwriting is very precise, and the rates are very low. If you're using your credit card, all the bank really knows is you're putting it all into a big bucket, and it'll revolve, and they'll make some money. That attention to the exact purchasing SKU level data, as the jargon goes, is a big part of the original advantage that we've created and something that we can continue to build on.
So I want to pivot a little bit here because the payments landscape is evolving so quickly. And I would love to get your thoughts on where cryptocurrencies start to play into what the future of payments look like to you.
For sure. And I imagine you saw we announced our entry into the crypto space as well. So here's my take on it. First of all, crypto as the idea and sort of the mathematical structures behind it is beautiful and is just worth marveling at. And I spend my copious free time reading about the new research because it is just frankly so cool. The volatility in cryptocurrency prices, to me, continues to render it a fairly poor instrument for value exchange. I think there's the stable coin genre is very different and very cool. And I think U.S. government has something to say, hopefully fairly soon, about how they think of it. And I think that will start making cryptocurrencies a medium of exchange that is worth being really on top of as a payments provider. That said, it's maybe the best, possibly the best asset class in terms of performance and appreciation of the last 5 years, probably 10 years. The reason we entered crypto is authentic to Affirm's mission. Our job isn't just to be a payment provider for you, it's to improve your life through financial products that are transparent and honest and clear. It made a lot of sense for us to say a couple of years ago, you should not just spend money, you should save it. So we launched a savings account that's been very successful. We're really, really proud of what we've done. It pays an excellent rate. We see a lot of savers within the Affirm ecosystem now. The next sort of chapter there made a lot of sense to say, all right, you know what, you should participate in this crypto economy in a safe, reasonable way, but you'll get better rates. And so part of our savings account will feature ability to save crypto essentially. And so in that sense, I'm very excited. I really want to see what our consumers choose to do. We're really interested in seeing the behavior and the engagement there. As a payments medium, I think stable coins is kind of where it's going to have to go before I'm completely convinced.
So interesting, because just a few weeks ago, really, you had Jamie Dimon, the CEO of the biggest bank in America, saying Affirm is one of the big competitors here, and saying that the entry away from just buy now, pay later into more debit and banking products, creates a new form of competition. He said that during his earnings, call with investors and analysts. I'm wondering how you answer that. And you had mentioned crypto as part of the savings product here. How does that start to make you more competitive when it comes to the big banks?
First of all, Jamie Dimon mentioning Affirm as a competition is incredible flattery, and I'm sort of blown away that we've made it to that next rung. He's an extraordinarily successful leader in our space, and I certainly look up to him. I'm sort of blown away. I didn't realize he actually name checked us, so that's crazy cool. That said, I think finance is a rapidly evolving space. We try to build products that improve consumer lives, and there's more to it than just payments. So we are, of course, launching all kinds of new things, like this Debit Plus card that we announced. It's something that we're very excited about to bring to market. Crypto is, I would argue, a feature, at least in our case, a feature of preserving money, saving money for consumers. It's a little bit less clear to me what other players are doing. I think traditional financial services players, large banks, do have some thinking to do. I think they have gotten very, very comfortable making a lot of money on things like late fees and revolving interest. And buy now, pay later, some call it revolution. I would call it the unbundling of the credit card. I think what's really going on is the credit card for the new generation just doesn't work. It has to be more transparent. More transparent means every purchase is visible. Every purchase has an end date if it's paid over time. I think it's a different product. We think that's what Debit Plus looks like, but I think a lot of traditional financial service providers have to ask themselves the hard question of, am I willing to reinvent my credit card portfolio, or is that just too much to ask, because that's where majority of the profits come from?
I'm wondering, because this could be true for humans, for people, you and me, but it could also be true for smaller businesses. And you work with Shopify, I'm sorry, I keep on calling it Spotify. Shopify, you work with Amazon. I'm wondering what the opportunity is for smaller firms to start standing out and using financial products like you're offering.
So there's already fairly healthy growth and competition in the small business version of buy now, pay later. I'm not sure they're using the same branding, but there's lots of companies that are now entering that space or providing more transparent finance and for small businesses and even larger businesses. And it's very exciting. I'm really actively watching what's going on there. We have our own little initiative in providing capital to merchants as well, and we partner with Shopify, as you correctly pointed out, on that. And so there's definitely something to be said for it. Nothing to announce quite yet from us, but it's a really interesting space. I think there's a fairly blurry line between consumers that are trying to take control of their finances, not pay extraordinary fees, not pay late fees, not pay deferred interest, And those same people that just happen to run a small business or own a small business, and they look at their consumer side and saying, that's really great. Why can't I have it for my small business too? And so I think that demand is natural. The market is pulling for new solutions.
And I think about small businesses and also creators, this whole concept of the creator economy. I mean, is this a place where a firm can make a bigger splash?
Absolutely. I think the creator economy movement in general is very exciting. Shopify certainly seems to be taking some very active strides towards that. And as a partner, we will be right there with them. I think ultimately, a lot of the creator economy is all about simplicity of the experience, feeling that you are in control, that you are emotionally bonding with the item that you're purchasing. And I think that that's very, very connected to what we offer. And one of the things that we stand for in the consumer's mind is you won't regret this. This will not make you feel like you got yourself into debt that you can't get out of. Like, it's all very clear and very transparent. And so we are a natural conversion and sales lift product, if you will, for the creators as well as more traditional merchants.
Max, before I let you go, what's the single biggest innovation that will change the future of finance in the next year or so?
Is it like too piggish to say debit plus? I have not been excited more about this product like this maybe ever in my life, but it feels very obnoxious to point a finger at our own work. I'm very bullish on debit plus. I think that should be on the record. I think my guess is there will be some I hope there's a really thoughtful play from the US government around digitizing the dollar. I think that's not an industry innovation, but I think if there is a soon to launch, because I think other economies are doing this, then US dollar as the reserve currency of the world will continue to thrive. I think the ability to have much better clarity and accountability around usage of money depends on that happening. And if this happens, it'll just create a giant field of new opportunities, anything from much lower costs to move money, much better way of tax enforcement, et cetera, et cetera. So I'm very much holding my breath for that. That's something that the Treasury, et cetera, has to decide to do. So it's less an industry thing, but I'm very, very curious and hopefully excited about what's happening there.
Yeah, we're looking forward to keeping an eye on it and hopefully touching base with you again soon. That's Max Levchin. He's the CEO of Affirm. I'm Shonali Basak. Thank you so much for joining us.
Hello, everybody. It's my pleasure today to talk with John from IBM on cloud and cloud-related movements. My name is Anurag Rana. I'm a research analyst with Bloomberg Intelligence, Bloomberg's in-house research arm. I cover most of the large cap technology companies here, such as Apple, IBM, Microsoft, and a bunch of others. And one of the things we wanted to talk today was dive deep into and understand what are some of the major trends that are transforming the technology industry. So with that, let me introduce John Diganon.
Hi, everyone. It's John Diganon from IBM. I'm the Global CTO for Financial Services based here in New York City. IBM Distinguished Engineer and a technologist working with all of our financial services clients.
Thanks, John. So one of the things that are, the most important things that are happening right now, I would say it started off probably 10, 15, 20 years ago, is the slow shift to the cloud, and then, it was all bundled towards under the umbrella of digital transformation. But last year, something unique happened, and we just saw an acceleration in spending. So let me first, pass it along to you and say, can you give a little bit of history of what happened, how this thing evolved, and what you saw last year?
Well, I think almost everyone in the world experienced it some way or other because of the pandemic. In financial services, clients of every kind tried to contact their institutions to make special arrangements because of the pandemic, and they struggled. Institutions struggled to service clients, clients struggled to connect. That triggered the biggest digital transformation initiative we've ever seen, and arguably accelerated the rate and pace by up to 10 times where clients had been up until that point.
So one of the things that we observed last year, that initially there was a massive spend going into communications products or security products or e-commerce software. But since then, we have seen there's a lot more interest in modernizing internal IT architectures and things like that. So every time I hear the word cloud, people have different definitions of it. Whether it's so when you talk to your clients, what's kind of their strategy when they look at cloud assets? How are they thinking about it?
You're absolutely right, Anurag. So most of the existing institutions have, in many cases, up to 50-year-old core systems. They want those core systems to participate in the digital transformation, to make the core systems available across new channels and new ways of delivering service to clients. That's been traditionally very tough without doing massive code rewrites. The opportunity for hybrid cloud makes available new ways of working, such as creating platform ecosystems of code that is infused by rich capabilities exposed through APIs and microservices, containerization technologies that standardize the way that software platforms are deployed, and create capabilities for availability, resiliency, and scalability. And underpinning all of that is the desire to run those workloads any place, lots on-prem, but also leverage the public cloud and do so with great consistency. So every client, one way or another, is striving to avoid the disruption by making systems available in the new fintech ecosystems, modernize the existing legacy, and support that entire digital transformation effort of servicing clients across new ways and reducing the cost of operations.
So one of the ways we have thought about is, either you're a cloud-born company, you started off writing code on the cloud, so you kind of are already there. But, our research suggests that bulk of IT spending is controlled by all the companies that have been in existence prior to the cloud era. And they control, whatever, the $1.5 to $2 trillion of spending out there. So if I'm a legacy bank or if I'm an older bank and I have a mortgage system that I've been using for a while, what options do I have if I need to move that over to the public cloud? Or for that matter, why should I even bother moving it to the public cloud? What are some of the advantages would it be for me to use those resources?
Well, I think you hit on a very key set of questions there. There's more than one question in there. But when we think about why, how are clients thinking about cloud and how is IBM thinking about clouds, we're not necessarily thinking about it purely as a destination where we run work. We think of it so much more than that, because to think about it purely as a location is a very narrow definition. So we think about it, for example, as a way of working. We think about it as being underpinned by open technologies, such as containerizations. APIs and microservices underpin hybrid cloud, as I mentioned, because they build the bridge both to the outside world, but both with the way that existing core systems can speak into or be connected to a hybrid cloud environment. And another way in which IBM thinks about hybrid cloud connects data transformation and API. We see almost every client that we work with, and we're working with many clients on exactly these types of transformation. We have a major bank working with us on containerizing a huge amount of their existing legacy estate to bring it into the hybrid cloud world and take advantage of that consistent operating model that spans any cloud destination. Another reason, the operating model is a huge driver here, because if I use 4 different clouds and have 4 different ways of working, arguably I probably have 4x the expenditure on my operations, on my security operations, and on maintaining my software deployment lifecycle. And so creating that consistency across cloud destinations, both the way that we deliver code and the way that we operate and secure, is crucial for clients. And hybrid helps, as I sort of close out the thought here, if embracing public cloud requires me to move a whole bunch of very sensitive or private data into that cloud, that's often a huge struggle for clients because of regulation, because of their concerns about exposure, potential exposure and data loss. And so another reason why hybrid cloud is crucial is because rather than bringing or taking their data to the cloud, we want to bring cloud services to the data, to the existing environments.
Can you, in a quick or an easier way, tell me that, again, with that same example, if I'm running that mortgage application, what are the steps that you take to go from one side to the other so that I can use some resources on the public cloud? How do you go about doing that?
Sure thing. It's a gradual process. And the way that we typically start is by looking at the existing applications. Those applications, we often call them monoliths, Anurag, because of the way that they were designed many years ago. We look for ways to compartmentalize and open the functions within those monolithic applications, typically by looking for the business transactions within them. Once we find business transactions, what we want to do is expose an API that enables us to call that business transaction from an external code. Then typically we create a new code with new functions and deploy that into a hybrid cloud ecosystem like Red Hat OpenShift and have that new code call the existing business transactions. That's a coexistence approach, which is extremely popular with clients. And the reason being is it's a gentle point of entry. Doing a large rip and replace of an existing core system can cost hundreds of millions of dollars. And arguably, what do you get by having done that, other than you spent a ton of money just to stand still? And the name of the game for our clients is avoiding the disruptors and being competitive and being able to use what they have today to deliver new functions. So that generally is the continuum that we start on. And as we add new functions, we tend to add those within the new hybrid cloud code base, but all the while calling back to the core system to write transactions. And that's a very typical approach that IBM services or our ecosystem partners would use.
So we have been talking about hybrid for a while, and I personally am fairly optimistic about its potential. But one of the pushbacks I get a lot is that recently there was a very massive security breach on on-premise environment, which was done through weaknesses that are there. So then the question comes in, why not just leave this application on the side and then rewrite the application in a cloud native way, and then not try to bridge the gap between the two, because one is leading to malware getting from an on-premise environment to the cloud environment.
Well, you're touching on a super important topic, Anurag. Cybersecurity and managing the threats is top of mind for any company in financial services. Doesn't matter who they are, from the largest players to the smallest, newest fintech. Security needs to be at the heart of everything they do. The IBM X-Force, which is our security group, published the threat intelligence report earlier this year, and it contained two fascinating insights. Firstly, malware is everywhere, and so malware is introducing threats both into on-prem code and cloud environments, public cloud environments. It doesn't matter where the malware is there, and it needs to be found. And so how you do that is one piece of this. The second finding was that misconfiguration is everywhere, on-prem environments and especially public cloud environments. Misconfiguration of basic things like network settings, authorization settings. And as an example, a very profound example, IBM, of course, does penetration testing as part of our security services. In every single penetration test we did with clients recently, we found basic configuration errors, which is stark. And typically those basic configuration errors were user IDs and passwords that were not properly set for services that are intended to protect client data. That's very, very concerning. And so being able to find those issues is crucial. It's part of how IBM helps clients with our managed security services, our zero trust software frameworks, and helping clients at every step of the security journey.
So within the financial services community, is there one particular subsegment that is embracing this faster than the others? Commercial banks, investment banks, retail banks. Who's coming? Who's really at the forefront, and which are the ones that are saying, you know what, I'm going to take my time to port over these applications?
I think the tidal wave started with consumer banking, because there was an expectation about how banks deliver services, and especially through mobile channels and conversational AI channels. And so that drove necessary transformation. But I'm equally working with every element of capital markets, corporate banking, brokerage, you name it, private banking, every domain of banking and financial services and insurance are engaged in the transformation journey, because everyone knows they have to do it at this point, and everyone wants the benefits. Everyone needs the benefits of a hybrid cloud approach. That's been fairly well proven at this point.
Typically, what would you say would be their personal, just in an average cloud penetration rates right now? If you look at some of the larger banks globally, where would you put that number? Somewhere, any rough estimate? 5% penetrated, 10%, 20%?
Less than 5% in production. Less than 5% in production. Massive amounts of experimentation, massive amounts of desire, but in production, less than 5%. You can, and there are notable exceptions of firms that are doing this very assertively, but most sprawling mainstream firms have been way less aggressive due to regulatory concerns, and primarily regulatory concerns. It's not a lack of appetite, but the concerns around risks have not only dampened the brakes a tiny bit on public cloud adoption, but also reinforced the need to bring the cloud into existing environments through hybrid technologies.
Got it. That's really fascinating. This has been a very, very interesting session, John. Thank you so much for your time, and look forward to talking to you again.
It's great to meet you. Have a great conference, everybody.
Welcome back. We're sitting here with Tanya Evans, a professor at the Penn State Dickinson Law School, Ericon Obote-Tokudo, of course, the managing partner and co-founder of Audacity, and Akela Gardner, Bloomberg News reporter. Thanks all of you for being here today. We're trying to have a little broad discussion here about not only the wealth gap in particular, but more importantly, some of the risks, some of the opportunities, some of the initiatives that a new generation of people are taking out there to try to address some of those issues. And maybe, Akela, you can start off. You've actually been reporting on some of these issues, on the percentage of people who are invested in stocks, some of the percentage of people who are invested in crypto assets, and you've seen some pretty interesting disparities between the Black community and the white community. Tell us what you know.
Definitely. So I think it's well known that Black Americans hold less wealth than they probably should in this country. Bloomberg data suggests that that number is about 4% of all wealth that's available, which is trillions of dollars in the U.S., goes to Black Americans, and that's compared to a population of 13%
in the US. So obviously a huge disparity there. And in my reporting, I found that Black Americans are actually more likely to hold cryptocurrencies than white Americans. So among investors, 30% of Black Americans, people who already hold some kind of investment, have cryptocurrencies. And that's compared with about 17% of white investors. So there is kind of this consensus that Black Americans are more willing to kind of take the chance or the risk, if you will, in cryptocurrencies. But there's a huge conversation that's happening online and on social media platforms amongst Black Americans who are exchanging information that they've learned, whether through education or themselves on social media, and kind of making an effort to share that with others.
What about the generational differences, Ericon? Specifically, she says that she's seen more people, I guess, investing in this, but is this mainly the younger generation? Are the older folks also getting involved in this as well?
Yeah, so most certainly the younger population is certainly gravitating to it, I would say, the most. And I think that comes from, of course, COVID sort of being the eye-opening moment for a lot of people around the world, but specifically communities of color across the U.S. recognizing that, you know, the bottom fell out in the nation, and everyone realized that you kind of have to fend for yourself. And so given that the United States is going to be a majority young and people of color in just a few years, that is the fastest growing demographic to adopt cryptocurrency. I would say, though, that to give more color on this gap and percentage differences between racial groups is that the crypto audience that is really driving the market in the United States today is young white male, probably under 40, that have significantly high disposable incomes, where the wealth transfer is already sort of well circulating and incubated within their family infrastructure. And I would say that the younger population of people that are people of color, especially Black youth that are participating in crypto, simply don't have the same volume. So you might find people who are excited about cryptocurrency, but maybe at max, maybe put to work $1,000 or $10,000 versus others that are putting millions.
Yeah. Well, Ericon, can you expand on that just a little bit? Because you've inserted yourself into this world. You've started your own fund here. What's the response been so far?
Yeah, so the response has been resounding from Black investors who want to participate as limited partners, in addition, all the way up to institutions like, you know, your large banks of the world that are interested in participating. I think what's most important is that people seek beyond lip service and the diversity performance of this opportunity, and really know that this is beyond the racial dynamic. This is recognizing where the future of innovation that's going to change the planet will come from, and that's undeniably coming from communities of color that have a vengeance to change the world in their best interest.
And Tanya, you've been beating this drum for a while as well. You've been involved, of course, with MakerDAO and some of their growth initiatives. Maybe you can tell us a little bit just about what you've seen with regards to the responsiveness of people in the Black community to embrace this.
I'm really excited about the response. It's been, in some sense, it's been a mixed bag, because in the Black and brown community, so many times people have been misled, misinformed. I can think in my grandmother's generation, going to sleep one day and the savings and loans on the corner the next day is no longer open, and people are losing so much. So there's a real mind shift that's also related to trust and reimagining what trust looks like in a decentralized world. But that presents a lot of really, really important opportunities, particularly for those communities like Black and brown communities that have traditionally been locked out of tech and finance. And we see the intersection of the two in the crypto asset and blockchain space. And so people are starting to lean in to see the reality, or at least the possibilities of what can be when one invests in crypto assets, and certainly in the DeFi space.
Well, Tanya, I mean, let's talk a little bit more about DeFi. There seems to be a certain degree of, I guess, freedom associated with that world, a certain degree of access. Can you just kind of define for our audience kind of what DeFi, decentralized finance, actually means to you?
Decentralized finance is a bit different than just purchasing Bitcoin or Ethereum or any of the other coins. Decentralized finance is reimagining what it looks like to participate in savings and loans. So, you know, the banking system effectively is encouraging folks to save, and those savings are then used by banking institutions to give loans on the other side of that. In the decentralized world, it's removing banking institutions and really leveraging peer-to-peer technology and automated protocols to directly connect both sides of that transaction in a way that has the potential to earn more interest and also to participate meaningfully in a loan environment that is so often fraught with systemic issues that, again, keep people from participating meaningfully in the banking system and also in eventually owning property as well.
Ericon, can you expand on that, and particularly on how people can be invested in this other than just, say, buying a crypto coin?
Yeah, so there's a lot to say about the myriad of ways folks can get involved. Right now, what we're seeing is culture and things like art and sports really leading the way in what is adopting a lot of young people, a lot of communities of color, a lot of just general diversity. And that's a really exciting aspect of this world. Some people would argue that NFTs, non-fungible tokens, are a form of DeFi in the sense that there is an asset that in some cases would typically be physical, but is now represented digitally, that shows your ownership of that thing. And where certain assets, call it CryptoPunks, for example, can cost perhaps hundreds of thousands of dollars, if not millions. People can actually own a piece of that one asset through something called fractionalized ownership. So really what we're seeing right now through things like NFTs and, of course, more traditional finance that is more crypto-enabled, that is coherent, like a very undeniably DeFi, we're seeing the ability for people to own small parts or large parts of assets that are increasingly becoming more valuable across this new internet. And ultimately, what's the most important thing for people, especially Black communities, is to be a founder or be an investor. Anything else is you doing some form of consumption, which we know has never really acted in our interest despite our $1.3 trillion purchasing power. So my encouragement for all audiences here is to get in your coding bag, get in your community building spirit, and this is now the opportunity to mobilize your community, your friends, and create an economy around so. And now is the time to say, I really wish this thing existed in the world. How could crypto or blockchain enable that? And I'm going to go raise funds, approach Audacity to get an initial check to build out this dream, because this is the time for Black people to be builders.
Either an investor or a founder. Kayla, you talk to a lot of young people who seem to also have that same mindset. What are they telling you?
Definitely. And some of the points that both Tanya and Ericon brought up were definitely the resounding response that I got from a lot of the people I spoke to, which is the aspects of crypto that are decentralized and really without mediators are very attractive to people because they've come not to trust the traditional financial system, and they see this as a form of freedom or liberation. And also talking about NFTs, I think a lot of Black Americans are aware that they contribute a lot to music and culture and different things that become very popular in the mainstream. And this is a way to kind of profit off of that and get credit for whether it's crypto dances or a song that goes viral without losing ownership when it continues to get shared and replicated online.
And we've seen this, of course, a lot with the people who are effectively creating this, whether it's with NFTs, of course, the success that we've seen with Top Shot and a lot of athletes and entertainers sort of reclaiming their image to a certain degree here. Does that, I guess, make the investor at the other side of the equation more interested in this? Is it encouraging?
I'll jump in here and say, I think investors should really think to themselves, what is this investment today and what will it be in a year, 5 or 10 years? If you have conviction that it'll be 3x or 10x your investment, then it's worthwhile to participate. But ultimately, I think that Black people, given those assets that you just mentioned, should think about themselves as launching NFTs, creating NFTs, such that people are buying into their creativity, their culture making, their influence, and others on the other side are having to decide on the long-term value of that person. But we know that Black communities have been the market makers for literally 400 plus years, and we've contributed to every global supply chain that the world world stands on, particularly technology. So it's our time to really tokenize our creativity and our culture and put it out into the market for others to participate in our shared ownership, but recognizing ultimately that we have to bet on ourselves and our value.
Let's talk a little bit about some of the technology underpinning this, Tanya. You are involved, with, of course, with MakerDAO, a decentralized organization. It's more than just investing. I mean, there's a way to lend. There's a certain accountability that participants have amongst themselves on these platforms. Can you kind of explain the underpinnings of that, how that works?
Well, first, even just at a high level, to talk about what the benefits are in the environment, you're coming down to two essential qualities that are absent in many respects in traditional finance, and that's access and transparency. And so access, we've spoken about a bit, but being able to participate regardless of your gender, your ethnicity, your race, to participate meaningfully in the system, but also the transparency of distributed ledger technology, meaning it's very jargony, but breaking down to the essence of what is the state of transactions and balances at any given time. And how do you verify the accuracy of that at any moment in time? And the absence of centralized power around who gets to decide what hits the ledger and what does not in this decentralized way, where it's a network of computers instead of one database that manages that information. And so that aspect of blockchain technology is very, very important. And we see it play itself out with a range of crypto assets, not just those that function as currencies, fungible currencies that are interchangeable, but as Erican said, about non-fungible tokens, those that are unique. And a final point is the way that all crypto assets currently in the United States are taxed. They're taxed as property, which means you enjoy the upside of capital gains. You also absorb losses, but that functions differently than currencies. And so it's the added benefit of participating in digital ownership in this new internet that also was very difficult to do in a Web 2.0 world where things were easily replicated and shared without exhausting the original. So there are a number of benefits from the technology that empower artists of color. And I'm glad that you also mentioned investors and collectors on the other side. There's empowerment on both sides to participate in finance and in art.
How do we, I mean, when you think about the traditional finance system, the traditional banking system, we know a lot about some of the structural issues that have effectively either blocked Black people from participating or at least limited their ability to participate in full here. How do we make sure that DeFi, crypto, blockchain, everything associated with this space here doesn't fall victim to some of the same issues that plague our traditional finance system?
I can start with that. I think a lot of Black creators are not waiting on institutional investors to get behind their projects. And I think that's what's so interesting about this space is it's really community oriented. When you create a blockchain project or you create a DAO, which I'm sure Tanya can speak more about, you really are building it with people you trust or you know. And so they're really using the power of community to create these projects, and they're not really waiting for institutional investors or big banks to get behind them.
I think that's very accurate. This is the empowering component of being able to participate on your own terms and in your own time, and not waiting on the sidelines for someone to give you permission to participate. The permissionless environment of decentralized finance, and Erica, and I believe, raised the issue as well of, yes, being on the investor side or the creative side, but on the other side, the other aspect of that is participating in the build of this infrastructure. The layer one technology of blockchain frameworks and things that are built on top of it. Caleb mentioned the idea of decentralized autonomous organizations or DAOs or decentralized applications. So I love the way Erican mentioned earlier, digging into your coding bag in order to empower yourselves on the technological build of it as well, because there is power in entrepreneurship coupled with this technology that will really start to eradicate the wealth gap that currently exists, that's built on the backs of high income at the expense of appreciating assets. We want to shift the mindset from focusing just on income. Income is important, or just on education. Clearly, as a professor, education is important, but meaningful ownership and participation will be in creating and owning appreciating assets, including businesses.
Yeah, I would definitely add on to that to say that one skill, two skills, three skills that I think are super important for all Black people mobilizing into crypto right now is to become very technically literate as much as you can and use your own natural creativity as you consume and learn this technology to reinvent and create new things that are outside of the bounds that technology is seeing today, because ultimately that's really where the astronomical wealth creation will be. Otherwise, anything else, you're getting a tail end or a piece of the final product that you think you're buying or owning, but you're not owning the core foundation. And now it's still early to own the foundation and infrastructure of the internet. And that's where most Black people will literally catch up in terms of wealth gaps. Second is to Tanya's expertise, we must become more legally savvy. And we must be very thoughtful about how we negotiate our community and partnerships and smart contracts and opportunities that secure our asset ownership into perpetuity. That part's really crucial that a lot of people overlook. And the third is we must become a community of doubles. That means a community that says, if I'm going to buy $5 of Bitcoin, I want to do everything I can to make it 10, to make it 20, to make it 40, to make it 80. We're only going to grow our wealth not by just having an income and holding assets, but getting in the game of growing our money. And there are various ways that are a lot more complex than what we've discussed today that can help folks generate 5 times their money, 10 times their money, in some cases 100 times their money. Black people have to get into that game despite all of the centuries that we've been excluded from it, because from building it to writing the language and the contract to ensure is that we own it for centuries in the future, and from tripling it and 10xing it, that's how we're going to literally transform our futures forever.
I want to get your thoughts here on geographical differences as well. Ericon, specifically you. When we talk about this, we talk about it from the perspective of Black Americans. Prior to the pandemic, I did a lot of traveling through West Africa, and the amount of discussion about fintech and alternative finance was enormous over there. And obviously there's been some changes since the pandemic, but I would think that the ability for not only ownership, but for more progress, or at least a faster rate of progress, would be a little higher in some of the emerging market nations that maybe don't have traditional finance systems to the extent that we have them here in the United States.
Yeah, thank you so much for asking. This is another part that is wonderful about this moment in history, is that another, mecca for Black people and African people is the African continent. And right now, what we're seeing is African countries and African markets are leapfrogging traditional finance infrastructure. So what took 400 years in the United States to build, the banks that we know today, the pension infrastructure we know today, the multi-trillion-dollar asset management firms that we know today, most African nations are completely skipping that process and going straight to mobile phones and wallets on these phones, crypto wallets on these phones becoming the new banks. So where you have a significant population of people across Africa and other communities where Black people exist, like Brazil and other parts of the world, that are largely unbanked, meaning they don't have and don't participate in traditional finance with the banking account. Now their wallet and their wallet on their cell phone becomes their bank, where there's no need to actually become banked because you are now bankless on your phone. And that's an incredible opportunity so that a market woman, a business owner, and a young student can now figure out ways to not only buy assets that accrue in value, generate yield, that they 5x and 10x, but now have direct access to the infrastructure and technology that they want to build for their market, which they can then create as the fundamental infrastructure for technology across the entire continent, of which all businesses globally will have to rely on. So now the average person across any African market becomes their own bank, their own technologist, and their own builder and inventor of the future of the infrastructure that will literally transform the entire continent. It's a powerful time.
Anyone else want to weigh in on that?
I'm so glad that you brought up the issue of looking at it through an international lens. I think the privileged conversations in the crypto space focusing so much on the United States shows a bit of the bias just that exists currently in traditional finance and other sectors. And to talk about this from the perspective of the full diasporic experience of Black people throughout the world is really, really important. And we may find it is my great hope that we will find that this is an additional layer of connectivity that we need to bring disparate communities back together to a global community in ways that we were not able to do in previous iterations of the internet.
Tanya, I also want to get your thoughts specifically on the regulatory environment. We've been talking a lot lately about, particularly here in the US and even in the European Union, there's been a lot more discussion, if you will, about putting up more guardrails in the crypto space specifically, but really in the broader DeFi space as well. The idea that central banks may even decide to interject themselves in this as well, particularly when it comes to stable coins and what some people see as a potential competitor to some of our reserve currencies out there. Is that regulatory push, is that a threat at all for investors?
It's interesting because the late 90s, when technologies like peer-to-peer technologies, Napster, Grokster, BitTorrent, which persists today, a lot of these same discussions were going on about how to regulate in a decentralized environment. We see the same thing now. I think regulators have been cautious to enter too soon. There's a lot of discussion around it, but I actually think that in most cases, regulators have paused to not thwart innovation, but they're always going to have to step in when investors and consumers are harmed. And so we're seeing a lot more activity around that space in the same way that we saw the earlier builds around the technology for Web 2.0, for example. You're seeing more activity from Treasury for under-reporting and non-reporting of crypto gains, particularly as we have a major infrastructure bill that's going forward and finding ways to actually fund it, so that's interesting. And we see regulatory movement both at the federal and the state level here in the Commonwealth of Pennsylvania. We actually have, a representative that's working on creating a regulatory sandbox to waive certain things that are thwarting the activities of innovation in this space. So we see it on both sides, some aspects of a crackdown for the harms, but also creating space for innovation in a safe environment that actually gives certainty for innovators so they stay here in the United States as opposed to going elsewhere.
Yeah. Okay, I want to get your thoughts on that as well. I mean, any of the folks that you've spoken to, have they raised any issues, any concerns here about regulation?
Yeah, I think right now regulation is really a wild card. We have the SEC chairman, Gary Gensler, who's expressed that, he's going to be very aggressive towards rulemaking around cryptocurrencies, whether they are a security or a commodity. And so I think those things could really have a big effect on the crypto world. As well as Biden's pick for the office of the comptroller of currency, Omarova, who's also expressed that, she believes crypto is creating a more dysfunctional financial system. So it's really a wild card what they'll do. We'll have to see in testimony if their tunes change. But, there is this fight between Democrats and Republicans over whether it's something that it should be hands off or we really need to be active about regulating.
And Ericon, I'd like to get your thoughts on that as well.
Yeah, I think that Tanya's point was a really fantastic one to remind ourselves of these cycles. Late 90s was a period in which a lot of people questioned just even the need for an email, let alone the dot-com boom that eventually ended up busting. But what happened from that 20 years later was that we can now herald people like Elon Musk and Jeff Bezos for having been founders during that period to have invented new parts of the infrastructure for the internet that now can celebrate multi hundreds of billion-dollar successes. So ultimately, our regulatory family and friends, we just want to invite you all to come participate on this side and really just recognize that we've experienced these cycles many generations a time or two, and we know that at the end of the day, this infrastructure is fundamentally capable of doing great good. Let's really get on the same page on how that can work and work thoughtfully together across generations, across different industries to say, okay, this is what we're going to do to protect some of the bad behaviors and the bad actors. But ultimately, we're going to say 20 years from now, remember back in 2021 when everybody thought it was a fluke? That's going to happen because history is repeating itself and nothing is new. So I just want everybody to remember that in all the efforts that we're making today, know that this movement will move forward, and let's be on the right side of history.
All right, well said. That's probably a great place to leave it. This has been a wonderful conversation. Our thanks to you, Ericon. Our thanks to you, Tanya. And our thanks to you, Akela.
Thank you all so much for joining the Financial Innovation Summit. We do hope you enjoyed these conversations. Thanks again, too, to all of our speakers and moderators, a wonderful program. And thank you also to our U.S. presenting sponsor, Invesco QQQ, our presenting sponsors, CoinShares, Copper, InterSystems, and Qatar Financial Center for making this virtual summit possible. If you'd like more information from our sponsors, please visit the resources tab on your screen. And most of all, thank you so much for being such an engaged audience. Stay well, everyone. Thanks again for joining us.